Good afternoon, everyone. Hi, Bharat. Hi, everyone. How was your previous examination? Can you guys confirm me whether my audio and video is clear? Okay, so I heard the accounts paper was lengthy as well, but it was easy. Law, I think, goes into the same category, right? Now you have time for taxation. Taxation has to be your best paper in this group so that this group gets sealed for you. So that's our plan. How was my trip? It was great. I had good time. Thank you. So I think it's probably the less busiest marathon that we might be doing in a very long time, because normally the marathon takes a lot of struggle because you might be coming after the examination. So I'm hoping that after yesterday's exam you slept off well, so that you are ready for a large amount of online session without thinking too much about other things. Okay, so I have scheduled this session in two methods, or basically I can say that I have divided the session into two categories. First, we will go ahead and then cover the concept areas, and so some people might only wanted to attend the procedures and things like that. So I have kept it into two categories. I have given the topics also on the description. I have mentioned what are the topics that we'll cover in each of the session. So we will have two sessions. One will be now, and another session we will start at 7 o'clock, and we'll do another 2-3 hours during that session as well, but that will be mostly procedures that we will be covering up. In this session we will be covering up the concept areas, and then if anything that is left out in terms of coverage, we will try to go through that either to tomorrow evening. So something like that we will try to see. Okay, so but that depends, like how much are we left out with, we will see at the end of the session. So but I want you to considering that your examination is only on 9th, I believe that attending a marathon session from your books or our books that you have already gone through, with some bit of additional learning that you would have had from ICA material, that will be what is required. And after, is this marathon enough for you to revise the entire topic? No. I would recommend you after the marathon to spend some time in terms of looking into the RTP, looking into some important questions so that you are well aware of the the method in which you want to solve the questions as well. But I'll give you a quick run around on all the topics. That's our objective. All right. So you can see this is the chapter that we have. So I'll tell you what are the chapters that I'm going to pick up for this session for us to look at. So we will start with discussing charge. Once you revise charge, a lot of things will get solved for you. So I will look at charge first, then I will look at value of supply, when I do charge, I will also do composition, levy, scheme as such. Okay, so that's also another topic that I want you to look at. Then I will recap for you input tax credit, then I'll give you an understanding on time of supply. Then depending upon how much time do we have, we will look at exemptions and some important areas from supply chapter. Okay, so we will have this session. Now we are like it's 2:30, so we will have this session going on till probably 4:45. Another 2 hours we'll do another one session. We'll take a break after that, another 10-15 minutes. Then we will continue with the same session, same link. Okay, we'll just continue and we will go till my stream is not visible. Can someone confirm me? Okay, got it. I'm just trying to reconnect my iPad. Something that I was writing was not visible. That's what he meant by that. I hope now it's visible. Okay, so I was telling you the order in which we wanted to cover the topics. That's it, nothing very serious. Okay, so okay, so let's get started with our discussion. So like I said, I will cover charge. I will start with charge, and we know that the concept areas would constitute your charge chapter, value chapter, ITC chapter, time of supply, exemption, and some portion from supply. That's our first target. So I told you that we'll do 2-hour session, take a break whenever we feel like, whenever I feel like, okay, I'm like, I need a break of 15 minutes, have a tea, come back. Then we will do another session and that will go till 6:30 or then we will, whatever we can cover in this will be concept, and then we'll start with the next session by 7 o'clock. That will, that will be the procedural discussion. Okay, that's the thought process in which we are starting. As far as our topic is concerned, I have marked these chapters as A category as well. Apart from that, you will definitely have to go through this. Amendment is A category for your examination. You have to look at in each chapter what is the amendment that we have, and there is a very high chance that on 9th there will be a question from the amendments that we are discussing today. Second, the mock test papers, whatever has come, and the RTP. Even though I have already an RTP video that I have uploaded on this YouTube channel itself. So okay, definitely you have to go ahead and then subscribe the channel, and then go ahead and then start watch those videos during your free time if you want to. If you have not yet gone through the RTP videos, it's available there. Okay, so I have already put in a separate video for amendments as well. So these two things I'll strongly recommend. Both will be constituting around 1.5 hours. It's completely in English, and it will be just giving you a full summary on what are the amendments that we had. So let's get started with charge chapter. We will precisely look at what is there for us to study in charge chapter. Okay. So charge chapter comprises of few examination concept. One is 9 subsection 3, which is reverse charge mechanism. All the cases are important. You will have to remember what is the conditional RCMs that we have. Okay, it's a very important portion that you have to remember. 9 subsection 4, generally they don't ask a very detailed question. So it's kind of a B category. But I will still recommend you just go through what is 9B, and we can also discuss what will be tested in 9 for subsection 4. Then 9 subsection 5, you will have to read it together with tax collected at source, section 52. So this is a new topic for this exam. This has not been tested in the past. So this is A category, can be tested. So we need to quickly go through all of those discussions relating to 9.5. That's it for charge in terms of our discussion, but we will club it with some exemptions that is to be required to be discussed. Then we have section 10, which is talking about composition levy scheme. There are 5 things that you need to understand. I'll take half an hour probably to discuss all of them. Let's get started with it. So what's the difference between 9 subsection 3 and 9 subsection 4? We said 9 subsection 3 and 9 subsection 4, both of them are basically talking about reverse charge mechanism. However, in 9 subsection 3, in 9 subsection 3 and 9 subsection 4, both of them, it is the recipient who pays taxes, right, to the government. But in 9 subsection 3, the recipient can be registered or unregistered. Both ways, in notified cases, it will be the recipient who has to pay taxes to the government. But in 9 subsection 4 cases, they're saying that it is an RCM case for inward supply from unregistered supplier, which means here always, okay, in the case of 9 subsection 3, the supplier, not recipient, the supplier can be registered or unregistered. In both cases, it will be the recipient who will pay taxes. But in 9 subsection 4, the supplier has to be unregistered. This is the only difference that we have. So we have about 19 cases that we have. I told you that there are certain smart ways in which you can remember few provisions for your examination. So please remember following notification numbers for your examination on 9th. One is notification 13/2017. This is a GST notification. In this notification, they are talking about specified cases of reverse charge mechanism, which means any reverse charge question that comes in, where they ask you any of the scenario, in the working note, we write this section called 9 subsection 3, read with notification 13/2017. So the problem that you have in terms of not remembering all the section can be resolved by this. You can remember just this one notification called as notification 13/2017 and then write it in your exam, because there will definitely be a question. Now, having said that, let us go ahead and then try to understand what are the cases of RCM that we have for us to remember. Okay, so this is the table that we've looked into while discussing in the classroom about reverse charge mechanism cases. Either if you are somebody who is not from our classroom, you can refer the ICA material or whatever material you have. Go to charge chapter, you will find something called as RCM cases. Let's go through all the 19 cases and then respective exemptions. Now, first case that we have for RCM is an insurance agent providing any services to any person carrying insurance business in taxable territory will be taxed under RCM. An insurance agent providing services to an insurance company Who is liable to pay taxes? It is the insurance company who is liable to pay taxes. The logic was very simple. We said all the RCM cases, we have this thought process that the number of suppliers are huge and the number of recipients are very less in numbers. Government looks into catch the recipients than the supplier. Okay. I also told you that when you're writing answer, always use the word, when you write recipient, say how do you write this for the examination? We would write, now to give you a perspective of how to write that answer, we will write like this: as per 9 subsection 3 of CGST Act 2017, read with notification number 13/2017, when an insurance agent is providing services to any person carrying insurance business in taxable territory. In all the cases of RCM, the recipient has to be in India. So that's why they have added the word in taxable territory. So when you write the answers, remember to use the word in taxable territory so that your answer becomes much better. Okay. So in such cases, when an insurance agent is providing services to any person carrying insurance business in taxable territory, is charged under reverse charge mechanism. It is not completely right to write RCM in the examination, but I have seen that most likely the examiners have not reduced marks for somebody who has written RCM. So even if you feel like you don't have a lot of time, you can always write RCM. So under RCM, then that's the provision that you will be able to write. So which means that whenever you write the answer, use the word taxable territory. Then second one, 2nd to 5, all of them are relating to banking sector. We said a recovery agent, the one who is recovering loans, if they provide services to a banking company, financial institution including NBFC in taxable territories under RCM. Now we divided the RCM cases into 2 categories. One is a conditional RCM, another one is a general RCM. And we said if you look at the first case and second case, it's general RCM. Any kind of supplier can provide services to banking company or insurance company and it will be under RCM. However, third one we call this as conditional RCM because they said the third case is an individual direct selling agent providing services to banking company, financial institution including NBFC located in taxable territory. Here, it is not enough if the supplier is direct selling agent, it has to be an individual. Then RCM will be applicable. If the direct selling agent is not an individual, it will be taxed under FCM. This was the thought process we had. Then we discussed about 2 additional persons. One person is called as business facilitator, another person is called as business correspondent. Business facilitator is the one who will do the activity for the banks by way of collecting deposits and then giving it to the bank or allowing people to withdraw and all that. These people are eligible for commission. It is taxable under RCM. But look at business correspondent. The understanding of business correspondent is slightly different here because if a business correspondent is providing services to the bank, it is not taxed under RCM, it is taxed under FCM. What is taxed under RCM? An agent is providing services to a business correspondent. So normally that transaction happens like this. Agent will provide services to business correspondent. They provide services to bank. This is under RCM. This is under FCM. Please remember this. Now for both business correspondent and business facilitator, there is an exemption that is available. We said if there is exemption, there is no question of charge. The understanding of this is that if something is exempted, then there is no need. If a transaction is exempted from GST, there is no need for us to assess whether tax to be paid by supplier or tax to be paid by recipient, because tax itself is not payable. So there is an exemption that is available for business facilitator and business correspondent. When will that be available? Only if the bank which is paying the commission or the account which is receiving this particular services from business correspondent or facilitator is located in rural area branch. So exemptions are given in notification number 12/2017. So merely by remembering 2 notifications, that is notification 13/2017 which is read with 9 subsection 3. Notification 12/2017 is read with section 11 of CGST Act. If you remember these 2 notification numbers, you will definitely be able to write this in the examination. Okay, that's an advantage that you have. Let's look at the next one. any person providing sponsorship services to a body corporate partnership firm including LLP is taxed under RCM. Now we said sponsorship service is nothing but advertisement. A classic example to look at here would be, say, Tata is sponsoring IPL. So the supplier can be any person is what the provision says. So Tata can be the supplier, the supplier can be IPL or any person. So how do I check who's the supplier, who's the recipient in GST? The one who's receiving the money would always be the supplier. The one who's paying the money would be the recipient, right? So whenever they provide services, they'll get money. Here IPL is getting the money, so IPL is the supplier. The supplier for RCM can be any person. And recipient has to be, this is also a conditional RCM. It says the recipient has to be a body corporate or partnership firm. They ask questions trying to test you whether you remember this particular part or not. Where did we see a conditional RCM before this? We have seen with direct selling agent. So they said any person providing sponsorship services, say IPL is providing sponsorship services to a body corporate or partnership firm. To whom? Say Tata. It is Tata who has to pay tax under reverse charge mechanism. When I say partnership, it even includes limited liability partnership. Now, together with this, we should also learn section 24. What is that section 24 means? What is that section 24 talks about? Can someone give me on the chat box? What is that section 24 talks about? It talks about compulsory registration, right? Now, there is a provision in compulsory registration which says that the moment you are liable to pay tax under RCM, you will not be able to check your threshold limit for registration. Your registration has to be based on section 24, which means that if I am somebody who is receiving service and RCM is applicable, I will have to definitely pay taxes under RCM by registering compulsorily under section 24. Very simple understanding it is. Okay. Then point number 7, say for this examination, for the examination on 9th, I feel like this is just a gut feeling that I have, there could be a question on director. If you look at a lot of ICA question that is being drafted at inter and final level, revolves around directors cases. So mark this director as very important and then try to make a full understanding of this. When will I have RCM applicable in case of director? We will have to look at some additional understanding in terms of director. So the provision I'll read you. Director of a company when they provide services to a body corporate being a company. But they said director of a company providing any services other than in their personal or private capacity. So for a director to have RCM applicable, director has to provide services in the capacity of a director. Let's look at this with the chart. Okay, so this is what they're going to test you in your examination in terms of director. Let's look at the summary table. There could be multiple type of directors in a company. Managing director, whole-time director, executive director. See, these directors will be eligible for two type of payment. One is salary, another one is a sitting fees for attending the board meeting. If they are receiving salary, how do I check whether the money that is received by director is salary or not? We will look at income tax TDS provision, because in income tax TDS provision 192 in income tax talks about TDS on salary. If the money that is received by the director is after deducting TDS under 192, it means that they are receiving salary, and it is not even a supply, because negative list says salary is not a supply. So the moment they are receiving salary, GST is not payable. If GST is not payable, there is no question of charge. However, if a managing director, whole-time director or executive director is receiving fee, the TDS will be deducted under 194J, and it becomes a supply and GST is payable. It is payable by the company under reverse charge mechanism. There is one more type of director called as independent director. Now, independent director is not eligible for salary, will only be attending the board meetings and receiving a sitting fee. So, of course, the income tax TDS will be 194J. Thereby, it is a contract and it is a supply, GST is payable. But who is liable to pay GST? It is the company who is liable to pay GST. I have written a note here. Look at this. Service by a director other than in the capacity of a director. So, for example, I am a director in a company. I have a commercial property I have given on rent to my company. This is not a service in the capacity of a director. Just because I am a director, it will not be taxed under RCM for any services. Only the services in the capacity of a director is the latest clarification. Please ensure that you remember this. Then, let's look at the case of GTA. So, GTA is a very important case. A lot of people struggle to remember this in full. Okay, but since it's very important, let's look at this in detail. A goods transport agency not opting to pay tax under FCM and charged GST as per applicable rate. So, supplier has to be a GTA, not just a mere GTA, the GTA who did not go for FCM. When they provide goods transportation services to a specified person. Okay. Now, if you guys remember, we had a code word to understand who are the specified person. Anybody from the chat box can put the code word for us to remember who are the specified person. So, to have RCM applicable, a GTA, a goods transport agency, has to provide services to a specified person. What if they are not specified person? Who can be not specified person? An unregistered individual like you and me will not be considered to be a specified person. BPL scarf, very good guys, very good. So, let's expand BPL scarf and understand who will be coming under RCM for that particular matter. It is BPL scarf. B stands for body corporate, P stands for partnership firm, L stands for LLP, S stands for society under Societies Registration Act 1860 or any other act, C stands for cooperative society, A stands for AOP, R stands for any person registered under GST, F stands for factories. So, these many people, if they provide services, if they receive services from a goods transportation agency, it will be taxed under reverse charge mechanism is the understanding. Now, if you look at, I have listed except for the sixth point, 1 to 5, which means that except for the people who are registered, all others mentioned in BPL scarf. Please listen to me carefully. People who are under BPL scarf, even if they are not registered, will come under specified person category. Because they come under specified person category, they will have to go mandatorily take a registration and pay tax under RCM. When the GTA is not opting for forward charge mechanism. Okay. Now, let's try to understand this together with exemptions that we have. Okay. This is the new summary that I have prepared for GTA cases for you to get better understanding. Let's look at this. How do I check whether GTA services is taxable? If it is taxable, whether it is taxable under FCM or RCM, how do I check that? Very simple, straightforward understanding. First, we have to look at, so we have to ask the question, is GTA services taxable? When it will not be taxable? There are two cases where GTA providing services, whether GT is under FCM or RCM, there are two cases where GTA services will be fully exempted. Number one, when the recipient is other than specified person. Number two, or recipient is somebody who is registered but registered only for TDS under section 51. Like they are a government, they are local authority registered but registered only for TDS. So there are two ways in which GTA services would be exempt. Number one, a recipient is other than specified person or only registered for TDS. Number two, they are transporting random 5. There are a certain notified goods. If you transport by GTA, the GST would be exempted. There's a code word for that we have studied, which is random 5, right? R stands for, what is random 5? Relief material. A stands for agriculture produce. N stands for newspapers and magazines. D stands for defense and military equipments. O stands for organic manure, okay, like cow dung and all that. Then M5, milk, salt, food grain, including flour, pulses and rice. If you transport these mentioned product which are under random 5, or if the recipient is other than specified person, recipient is other than BPL scarf, or recipient is registered but only for TDS, then GST itself is exempted. If GST is exempted, there is no question of charge. Now, question is, GTA is providing services and it is not coming under exemption. Then I have to ask the question, is GTA going for FCM or going for RCM? If GTA is going for FCM, then again GTA is liable to pay taxes. Now, but there are two rates that is applicable. See, GTA can go for 12% under FCM or can go for 5% under FCM. What's the difference? GTA will have lot of inward supply, right? GTA would have taken purchases of vehicles, GTA would have done some consumable purchases. All these purchases by GTA will not be available as credit if they have gone for FCM 5%. They will get credit if they have gone for FCM 12%. Now, let's look at the same chart again and say GTA services, first of all, it is taxable and GTA did not go for FCM. Then the recipient has to pay tax under RCM. Who's the recipient here? BPL scarf. Why? Because if it's not BPL scarf, we would have taken exemption for that. Are you guys understanding? When the recipient is paying taxes, it is paid under a reverse charge at 5%. Is it clear to all of you? If that is clear, can I have a quick yes on the chat box, everyone? Okay. Now let's look at two more RCM cases. All of these are relating to legal structure in India. Now I'm going to consolidate legal structure for you because there is one more provision from your negative list that will become relevant for legal structure. Okay, so I'm going to consolidate whatever I've consolidated during the workout batch. I will show you. Some students definitely will be from workout batch here. You would have seen this particular notes that I've written at that time. Now, in legal structure, we have two provisions that is applicable. The first institution that comes into the legal structure is the court. Okay. So, in schedule 3, that is in negative list, if you look at para 2, it says services by court or tribunal is not even a supply. But it says services by court or tribunal is not even a supply. Here court means district court, high court and supreme court. Tribunal means appellate tribunal, like an appeal tribunal, not arbitral tribunal. These are not even a supply means, which means that there is no GST applicable at all for the court fees. Now, who else comes into the legal structure in India? It is the advocates who comes under legal structure. So, they said there are three type of people who can still be in the legal structure who are not court. One is individual advocate, including a senior advocate. Who is a senior advocate? Somebody who is designated as senior by High Court or Supreme Court. Or the advocates can be running a firm. So, we can say that there could be firm of advocates. Then, arbitral tribunal. Arbitral tribunal is a body where arbitral tribunal is a body where two people come together for arbitration or negotiation, and they will have somebody coming and then listening to both of them and then solving the issues by collecting a fee. So, there is fee paid to individual advocate, firm of advocate or arbitral tribunal. Would it be taxable under RCM or FCM? So, for that we need to understand some exemptions, some RCM, some FCM. Okay, so let's look at this particular chart and then try to understand this perfectly. So, you can see I have created a chart wherein in the middle we have the supplier. Who is the supplier? Individual advocate, including senior advocate, firm of advocates or arbitral tribunal. Now, they can provide services to various set of people, and this chart should give you full understanding about the legal structure. First, if they provide services to legal services to person other than business entity, which could be an individual who is not running any business, a charitable entity which is not a business entity. Government said, I don't want to collect GST at all, it is exempted. Similarly, when they provide services, who? Individual advocate, senior advocate, firm of advocates or arbitral tribunal, they provide services to government, local authority, governmental entity, that is also exempted. There is no GST applicable. Then next, third person is a small business entity. I had coined this particular word called small business entity to give you an understanding on certain exemptions. There are two places I will use the term small business entity. One is here, another one is in the government cases. When an advocate or senior advocate or firm of advocate or arbitral tribunal is providing services to a small business entity, who is a small business entity? Their previous year aggregate turnover is less than threshold limit for registration. Such entity will be called as small business entity. If they receive services from an advocate, that is also exempted. Now, what if this small business entity has taken voluntary registration? What if they have taken voluntary registration? Still, they would be called as what? Small business entity. Are you guys understanding? So, irrespective of note, it is exempted even if the small business entity has taken voluntary registration. So, I'm an advocate, I provided services to Royal Bakery. Royal Bakery's turnover is 15 lakh, but they have taken voluntary registration, still exempted. So, in an examination question, they'll give you some hint whether the business entity is a small business entity or a big business entity. You have to catch that particular hint and then answer. Alright. Then, what if they provide services to a big business entity? We discussed about small business entity. What about a big business entity whose turnover is more than the threshold limit? It is taxable. Only that is taxable under reverse charge mechanism. It is the business entity who has to pay taxes. Similarly, look at 2 and 3 points. An individual advocate other than senior advocate providing services to another individual advocate or firm of advocate is also exempted. One advocate, another advocate is exempted, but a senior advocate, look at point number 3. A senior advocate is providing services to another individual advocate or firm of advocate will be taxed like any other big business entity. So, when advocate to advocate, what is not exempted? Senior advocate providing services to other advocates are not exempted. What if a senior advocate receives services from another junior advocate? Those are exempted still. Okay, so a senior advocate providing services to other advocate, when it will be taxable? If the other advocate is a big business entity. That's the understanding there. Then we have government cases. If at all a question comes from government's cases, it is going to be little an effort to remember all the provisions across. So another 10 minutes that we are going to spare in terms of explaining what is RCM for government will become very important for you. Okay. Look at this. There are 3 cases of reverse charge that I have listed here. One is government or local authority providing services to business entities under RCM. Second, government or local authority is renting immovable property to a registered person is under RCM. So, renting of immovable property to registered person. Then any person, be it government or not government, renting a residential dwelling to a registered person is also under RCM. So, our understanding, our discussion used to happen in 2 separate manner. Okay, we'll try to understand that. Say, please remember, now for this particular purpose, there is one clarification they have given which says, for this particular RCM cases, government would include parliament, state legislature, court, tribunal, etc. Means, if the court or tribunal is giving something on rent, it will be taxed under RCM. We'll try to understand. Together with this, there is one more amendment that has come, which is Ministry of Railways. Ministry of Railways will now come under FCM in total. No RCM at all. Okay. And consequently, there are some exemptions that is withdrawn in case of Ministry of Railways is also something that you can see in exemption chapter. We'll try to understand one by one. Now we said at that time our discussion used to go like this. We used to make a logical approach. First we understood governments or local authority doing some services is a business activity under GST. There is no exemption that is given for government or local authority. The second point that we have seen, in certain cases government had notified and said, hey, in some cases governments or local authorities activities will not be treated as a supply. Which are the cases where governments or local authorities activities are not treated as supply? Number 1, the activities of panchayat or municipality under Article 243G, 243W. Second, who provides activity? First one, panchayat or municipality. Please remember this term, Article 243G, 243W. The moment you see Article 243G, 243W, it is not taxable for sure. Second, state government giving alcoholic liquor license is also not treated as a supply. Now, second thing, alcoholic liquor for human consumption in GST is called as non-taxable supply, but that is goods. What about alcoholic liquor licenses given to the bars and the restaurants? That is having a money that is being collected by the state governments. Is it taxable? It is not taxable under GST either. It is a service, but it is not taxable because it's not even a supply. 7 subsection 2 clause B, they have notified these are not supply. Except these two, all other activities of governments are considered to be supply. If we consider everything other than those to the government as provided by the government as supply, then is it all taxable supply? That was the question. So for the purpose of GST, I am classifying the activity. I am saying that broadly we can classify the activities into 2 categories. One is welfare services, another one is commercial services. If the service provided by government is welfare services, the recipient, the beneficiary of the services would most likely be public. Now, when the public is receiving services, I should give exemption because I should not have more cost that is passed on to the public. But they did not give exemption of the government services to public in 3 different cases. Now, that's one is an amendment, but we need to understand in total for this. First one, postal department services. Now, please understand, postal department, some services are exempted by another entry, which means we have a code word for the exempted services of postal department. We call them as BIPO. Book post, inland letter, postcard, ordinary post which is less than 10 grams. Except these 4, all other services by postal departments are taxable. Is it taxable under RCM or FCM? It is taxable under FCM because I cannot ask public to pay tax under RCM. Second, service in relation to vessel or aircraft in the airports is taxable under FCM. It is taxable even if it's provided to public. Then, transportation of goods or passengers is also taxable. In some cases, the other entry gives exemptions, like for example in railways, whatever services provided by railways is taxable under FCM, it is not taxable under RCM. Now, some services of railways are exempted, like and other than AC and first class, railway tickets are given exemption. Okay, only AC tickets and first class tickets are taxable. Similarly, the Indian Railway will have so much of revenue, advertising revenue, renting of space revenue, a lot of other revenue that comes in other than tickets. None of them are exempted, all of them are taxable, but all of them are taxable under FCM, not RCM. Because Ministry of Railways is a government department, still it is taxable under FCM is the understanding. Then, please note, these three services that I have listed here, that is services by Postal Department, Ministry of Railways, vessel and aircraft, transportation, these are taxable under FCM even if it is received by business entity. That's the second branch. They said government can provide commercial services, giving licenses, mining license, that license, this license. All the licenses that is given by the government to business entities are taxable, but taxable under RCM. But these three services received by business entities, which are these three: Postal Department, Railways, Vessel and Aircraft, Transportation of Goods or Passengers, these received by business entities are taxed under FCM. That's what we have written here. These three services are taxable under FCM even if it is received by a business entity. Is it clear to all of you? Can I have a quick yes on the chat box, everyone? Next is renting. So I'm going to give you one single chart which consolidates everything, and I told you at the time of regular session and workout session that you'll have to remember this chart, and every time there is a rental question, go to this chart and then get the answer. Alright. So firstly it says renting of immobile property can be of two types. There could be commercial property, there could be residential property, right? Now, commercial properties are always taxable. Please remember, the moment the question talks about commercial property, it's a very important area because a lot of questions are being tested in this particular area, like examiner's favorite. So, if there is renting of immobile property and if it's a commercial property, always taxable. But if it's a residential property, it's sometimes taxable, sometimes not taxable. Now, if I give a commercial property on rent, I have to ask the question, who's the owner of the property or who's the person giving the property on rent? Okay. If the person who's giving the property on rent is government, local authority, parliament, SLS, state legislature, court or tribunal, if the one who is giving the property on rent is any of these people, then I have to ask the question, who is the recipient? If the recipient is registered, it is taxed under RCM. If the recipient is unregistered, it is taxed under FCM. Why? It is always taxable. Then, if the recipient, if the supplier, the one who's owning the property is not government or local authority, parliament, state legislature, court or tribunal, then it is always taxed under FCM. But it's always taxable. The question is only RCM or FCM. Okay. Then, what if the property in the question is a residential property? If the property in the question is a residential property, the supplier can be any person. The recipient, I have to ask whether supplier can be any person means supplier can be registered, unregistered, whatever it is. Now we have to ask the question, who's the recipient? If the recipient is also unregistered person, like you and I, we take a residential property on rent, a house on rent, a flat on rent. it is exempted from GST. However, if the recipient is a registered person, it is taxable, but it is taxable under RCM. The recipient will have to pay taxes. Okay. Then note, there's a question, there's a confusion that happens if the sole proprietor who's having a PAN number and that PAN number is having a GST number, he's also taking a residential property for his personal purpose. Will I have to pay tax under RCM for that also? The answer is no. If the sole proprietor who is registered person receives renting of residential dwelling for personal purpose, Mr. Raju is taking a house, he's having his own businesses in his PAN, but he's taking a house for his family to stay, will be exempted, not a business expense. Is it clear to all of you? Can I have a quick yes on the chat box? Now, very important one. Small business entity exemption is available even for government. Let's read it. As per notification 12/2017, again exemption notification, which says services provided by government or local authority to a business entity whose aggregate turnover in the previous financial year is less than threshold limit for registration is exempt from GST. Where did we see this? Small business entity exemptions are there in two places. One is for legal, another one is for government. But the small business entity exemption is not applicable. It is not applicable for the FCM cases and renting of immobile property. These are not applicable in that cases. So I'm going to run you through an example question because it's a little confusing for people generally, and if they ask a question, it could be a bomb question for most of you. Kerala government has given mining license to following business entities. Comment whether GST is payable in such cases. If yes, who is liable to pay GST? Number 1, ULCCS contractor received mining licenses and paid 2 crore to Kerala government for the same. ULCCS turnover in the preceding year is 500 crores, not a small business entity. So when government is providing services to a business entity, it's taxed under RCM. Here ULCCS contractor will pay tax under RCM. Question number 2A. Mr. Ashik received mining licenses for 10 lakh. Mr. Ashik has an aggregate turnover of 15 lakh in Kerala for the preceding financial year. Is Ashik a small business entity? Yes. Whether Ashik receiving services from government for mining license is taxable? No. A small business entity exemption can be availed by Ashik. Would your answer be different if Mr. Ashik has obtained voluntary registration? No, because we have said small business entity exemption is applicable even if they have taken voluntary registration. Look at the third case. Kerala government also provided services in relation to vessel to ABC Partners LLP, an unregistered person having turnover of 5 lakh for 50,000. Would it be taxable? Yes. Why? Because a service relating to vessel is taxed under FCM. So whatever is taxed under FCM will not be eligible for small business entity exemption. That is not there for FCM cases, including immobile property renting. I hope that is clear. Okay, next. There are two more cases that we can learn together. One is a music composer, photographer or artist, okay, which are all creators. They do temporary transfer or permitting the use or enjoyment of copyright relating to original, dramatic, musical or artistic work to a music company, producer or the like. It is the music company or the producer who has to pay tax under RCM. Music company will be working with so many composers, so RCM is applicable for their royalty received. Similarly, when an author is writing book for a publisher and receiving royalty, it is the publisher who has to pay taxes. But author is given an option to pay tax under FCM like GTA. But if the author is going for FCM, what is the benefit? Author can take input tax credit on their inward supply taxes paid. Number 2, there are conditions to be satisfied, like the author has to give a declaration that they want to go for FCM. They cannot withdraw FCM for 1 year from the time of exercising this option. Look at Reserve Bank of India. Even Reserve Bank of India can be put it into a question. Earlier, RBI services used to be exempted. Now, services provided by RBI is taxable when they provide services to banks. So, anybody providing services to RBI is also taxable. So, we can conclude in summary, you can see here the summary. Services provided by and to RBI, both of them are now taxable. However, one services provided to RBI will be taxed under RCM. RBI will have to pay tax as a recipient. What is that service? It is overseeing committee member of RBI providing services to Reserve Bank of India. We said overseeing committee members are very similar to independent directors. They come, attend some meetings, give consultancy and get a sitting fee, and that is taxed under RCM by Reserve Bank of India. They can create a question clubbing all of this. We have done a question during our workouts and even in classes on top of this. Now, security. Here we can club another topic and then try to have better understanding as well. That is, lender of a security is lending the security to the borrower of security. It is the borrower who will have to pay tax on the security lending charges. I've created a new summary for securities as well. Onto the screen, everyone. Disposal of securities, facilitating transaction in securities, and lending of security. These are the three transactions that are generally tested in the exam. What do you mean by disposal of security? That is sale and purchase of securities. This is neither goods nor services, not a supply, no GST. However, facilitating transaction in securities. What do you mean by facilitating transaction in securities? Like the stockbroker letting people or helping people to buy and sell stock by paying a brokerage. So, the activity of stockbroker by way of facilitating transaction in security is treated as a service. Who is liable to pay taxes? Who will collect taxes? It is FCM. Stockbroker will collect and then pay to the government. Third transaction is lending of security. I am not giving or disposing the security. I am just lending it for some time, getting it back afterwards. This is also treated as a service. Example would be a high net worth individual lending stock to a broker for a charge. Now, this charge is taxable, but it will be the recipient of the securities lending service who has to pay tax under RCM. Next is security services. This is a conditional RCM. It says any person other than body corporate, when they provide security services. What do you mean by security services? It means supply of security personnel to a registered person located in taxable territory other than government or local authority, governmental agency registered only for paying TDS under section 51. Number 2, a person registered under section 10, that is composition levy scheme, will be taxed under RCM, which means that supplier has to be a person other than body corporate. Recipient needs to be registered. What service they are providing? Providing security personnel would be taxed under RCM. But if the registered person is registered only for TDS, or they are registered and but opted for CLS, in both of these cases, it will not be taxed under RCM, it will be taxed under FCM. This is another understanding. Then, look at the last RCM cases that we have to discuss. It's a very important case. There are multiple provisions that you need to understand here. First of all, it's a conditional RCM. Okay, let's read it from the screen or from your book very carefully. Any person other than body corporate. Supplier should not be a body corporate, should not be a company who supplies service to a body corporate. So, the recipient has to be a body corporate. So, first condition, supplier not a body corporate, recipient is the body corporate. What service? Service by way of renting of motor vehicle designed to carry passengers, which means a car, a bus. So, something that is designed to carry passengers is given on rent. And the supplier who is giving it on rent is not charging 12% GST and then availing full credit. Then recipient has to pay tax under RCM. So, 3 conditions to be satisfied there. We have in after couple of pages, we have that written again as a detailed understanding. Okay, these are the 3 things that we have. Circular clarification which says RCM shall be applicable only if 3 conditions are satisfied. Number 1, supplier is not a body corporate. Recipient is a body corporate, 3rd condition. Second one, a renting of motor vehicle where cost of fuel is included and does not bill 12%. They are under 5%. How do we conclude this? We need to understand all the related provisions. So, I have listed all the related provision and I am going to give you full understanding. Look at this. There are 5 things that you need to understand relating to renting of motor vehicle. I am giving you full understanding of it. Number 1. What is the difference between renting and transportation? Number 2, what is RCM? When will I have RCM applicable? Number 3, is there any exemption on renting? Number 4, what about the ITC? After whatever GST I paid on renting, can I take the input tax credit? Number 5, what is the RCM tax liability? When will I have to pay RCM liability? Okay, these are the questions that we have to address. First, what's the difference between renting and transportation? Look at this. Renting of motor vehicle, the focus is on the vehicle, the recipient is free to use. I am taking a vehicle for 1 full day. I can decide from where to where it has to go. That is called as renting. But transportation means it is for a predetermined schedule, for a predetermined route. Similarly, goods transportation and goods vehicle renting are also different. Goods transportation again is focused on taking goods from point A to point B, but renting of goods vehicle is the recipient can use the vehicle as and when they like. Okay, so next question is, when will I have RCM applicable on renting? Option number 1, option number 2, you can see it on the screen, which means what? Somebody who's into renting business, renting of motor vehicle business, where cost of fuel is included and it is designed to carry passengers, they have 2 rates to choose from. They can either go for 12% or they can go for 5%. 12% rate will be applicable. When 12% rate is applicable, they will be eligible to, the one who is giving vehicle on rent will be eligible to take full input tax credit on their inward supply. Then, if they are under 12%, RCM is not the question. So, the one who is giving the vehicle on rent will have to pay tax under FCM. It will always be FCM only. But if they did not go for FCM, which means that they are under 5% with restricted ITC that they are looking at, then I have to ask the question, hey supplier, are you a body corporate? If the supplier is body corporate, then a clean case of FCM at 5%. But what if the supplier is not a body corporate? Then I have to check one more condition and satisfy for RCM. That is, recipient is also a body corporate or not a body corporate. Suppose recipient is not a body corporate, again FCM 5% will come, because supplier should not be a body corporate, recipient should be a body corporate. They think body corporate is an organized entity, I will be able to collect taxes from them under RCM. If the supplier is not a body corporate and recipient is a body corporate, then RCM is applicable. What if supplier is not a body corporate, recipient is also not a body corporate, but they are under 5%, FCM 5%, supplier will pay. If the recipient is also a body corporate, supplier is also a body corporate, also under FCM. That's why I said supplier body corporate FCM. But supplier is not a body corporate, recipient is a body corporate, it will be taxed under RCM 5%. Third thing, sometimes when you give your vehicle on rent or vehicle on hire, the GST itself is exempted. What kind of vehicle is that? 3 passenger vehicle, 1 goods vehicle renting is exempted. Number 1, motor vehicle for more than 12 passengers given to state transport undertaking like SRTC, TNSTC, etc. It could be any type of vehicle, EV, petrol, diesel, CNG, anything, it will all be exempted. Giving an electric vehicle, electrically operated vehicle to local authority, that is also exempted. Then, vehicle given to someone who is transporting student, staff, faculty to preschool till higher secondary is also exempted. If somebody is doing transportation of SSF, student, staff, faculty to school till higher secondary is exempted, whatever they collect. If they take a vehicle on rent and they pay some money amount to them, that is also exempted. Then goods transport vehicle given to GTA is exempted. A lot of people forget that goods transport vehicle given to GTA is exempted. I've seen a lot of wrong answers in the exam. Please remember for this exam, if you see that Mr. Raju is giving 5 truck to Agarwal GTA, it is exempted. GTA taking trucks on rent is exempted. Please note, say there's a block to credit or ineligible credit concept that we have. We said renting, leasing, hiring of motor vehicle, vessel or aircraft for which ITC is not available on purchase will be a block to credit. We'll try to understand what it is. See, look at 3 vehicles that I have listed. Passenger vehicle with less than 13% capacity. Number 2, vessel like boat, aircraft like private jet. If the companies or if the business entities are purchasing this by giving their GST number, what? A car less than 13%, a boat or a aircraft, if the company is purchased, there will not be any credit available to the company. These 3 items, these 3 products or these 3 inward supplies, if they, instead of buying, if they take it on lease or hire, that will also be not available as input tax credit. That's the second one. Motor vehicle, vessel or aircraft for which similarly no ITC on a registered person takes these on rent or lease or hire, that is not available as ITC. But anything other than this, motor vehicle, vessel or aircraft for which ITC is allowed, like goods vehicle is ITC allowed when you purchase. In such kind of vehicle, if they take it on rent also, you will get ITC available. Okay. Next, time of supply for recipient of services. So how do I fix time of supply? Time of supply in GST is discussed in CGST Act. What are the sections for time of supply that we have? We have section 12, we have section 13. Section 12 talks about how do I determine time of supply for goods, and 13 for time of supply for service. In section 13, subsection 3, subsection 2 talks about FCM, subsection 3 talks about RCM. It says, hey, recipient of service, how do you determine what is your time of supply? It says, date of payment or 61st day from date of invoice, whichever is earlier, is your time of supply. Next month 20th will be the due date of deposit of GST to the government. Now, I'm going to give you one example. I'll recap an example which will give you full clarity on all of these areas. Look at this example very carefully. Say, Infosys wanted to take one car on rent. Infosys has taken car on rent from Mr. Raju, the supplier. Raju did not go for 12%. Question number 1. Who is liable to pay GST? First, Raju did not go for 12%. Is Raju a person other than body corporate? Yes. Mr. Raju means is an individual. Number 2, is the recipient a body corporate? Yes, Infosys is a body corporate. So what is applicable? RCM is applicable. Infosys will have to pay tax under RCM at 5%. Understanding? Then, question number 2, what is the time of supply for Infosys? We said date of payment. When did Infosys make the payment to Raju? When did they make the payment to Raju? 15th January 2024 is the date of payment, or 61st day from date of invoice. When did Raju issue the invoice? On 1st January. 1st January means January has 30 days left, February 28 days, that makes it 58. 61st day means 3rd of March compared with 15th of January, right? Which is the earlier date, 15th of January. So, did they make the payment within 60 days? Yes. Then the date of payment would be the time of supply. So, Infosys will have to consider this service to be received in the month of January itself. On or before 20th of February, they will have to pay taxes. So, time of supply is 15 Jan, due date is 20th of February. They have to pay 5% GST on 1 lakh, which is 5,000 rupees. Understanding? Question number 3. So, Infosys for the month of January will pay this particular taxes to the government because the time of supply is Jan. So, they will pay on or before 20th of February. So, while filing the GSTR 3 before January, can Infosys take the input tax credit of this? Can Infosys take the input tax credit? No, because this is a 5-seater car. If you purchase this car, no credit. Similarly, if you take this on rent, even if you pay tax under RCM, there is no credit that is available. Are you guys understanding this? Is it clear, everyone? Let's look at 9 subsection 4 now. 9 subsection 4 says, my supplier is unregistered. Recipient is registered. In notified cases, it is the recipient who will pay tax under RCM. But this is not a general case. It is only on one notified cases it will be applicable. What is that notified case? They said, in real estate sector, now the tax rate is reduced from 18 or 12% to 1% or 5%. So for the real estate developers, government said, hey, real estate developers, because you don't have ITC, there is a very high chance that you will purchase from unregistered fellows. So I'm putting a condition now that everybody who is doing a real estate residential project, 80% of your input and input service has to be from a registered person. Out of 100 crores, 80 crores has to be from a registered person. So you would have paid the taxes, you would not have taken ITC. What if my purchase is only 70% from a registered person? On whatever shortfall you have, you pay tax under RCM. Who? The developer, you pay tax under RCM and then don't take credit. This is what they have fixing as a criteria. Are you guys understanding this? That is 9 subsection 4. Okay. Now, before going to 9 subsection 5, I know that some of you guys might be waiting here from 2 o'clock. I will give you first a small break, 10-15 minutes break we can take now. I think we should all take a small break and then come back. You can tell your friends, whoever wants to join. I'll be talking about tax collected at source now. Okay, it's an important area of discussion. I'll talk about TCS after we come back from the break. I'll talk about TCS. I will talk about 9 subsection 5 and I'll talk about composition levy scheme. All right? Okay. Welcome back, everyone. Is the audio and video clear? Can you please confirm me the audio and the video? We can start off. Is the AV clear? Okay, so let's get started. There are four kinds of e-commerce operators. E-commerce operators are defined as a person who owns, operates, or manages an electronic or digital facility or platform for the purpose of e-commerce. That's all. The definition says anybody who's buying and selling or providing services online will be called as electronic commerce operator. Okay, so electronic commerce operator TCS provision was not applicable in the examination so far, and this will be the first examination where you will be writing answers on this. So you have to be having full clarity on the basics of e-commerce operator. They can ask questions which will club you something from amendments, which will club you something relating to e-commerce operator provisions. For TCS, they can ask you something relating to 9 subsection 5. So I can precisely divide the e-commerce operators into 4 different categories. I can rather tell that there could be 4 type of e-commerce operators. Okay. Now, for the purpose of GST, we classify e-commerce operators into 4 categories. The first category is the e-commerce operator who sells third-party product or goods or services through their platform. They collect the money, somebody else is sending you the goods on behalf of them, like Amazon, right? There are sellers listed in Amazon, there are buyers listed in Amazon. These two people come together and they do a transaction inside Amazon. Now in GST, this kind of platforms will have a provision called as tax collected at source that is applicable. Second type of e-commerce operator are D2C platforms, like your Amazon, like your Max Online, like your LP Online, or a lot of companies who are selling their own product online, like Tax School which is my gift to the students in terms of providing classes through online. So you go to taxschool.in, you can actually go and avail services there. You can get classes there. So these are direct sites. Tax School does not have others listing their classes inside that. Everybody is selling the classes through them. So it is e-commerce operators who are selling their own product or purchase and sell the product. These kind of e-commerce operator will not have any TCS provision applicable because they don't have any tax collected at source that they need to do. There is no payment that they make. Say for example, LP, if they are selling their product online, LP will not collect consideration and then pay to somebody. LP will keep the consideration with themselves, right? So that is the second category. Third category, who are listing the third party product but will not sell it through their platform. E-commerce operator not collecting consideration and only connects buyer and seller like OLX. They'll also have normal provision applicable. Now the fourth category is out of the first category, which means like Amazon kind of e-commerce operator, some people we handpick, we select and tell them, hey, in some cases you pay full taxes to the government. You don't do TCS, you pay the entire taxes. All the GST provision will be applicable for them. They are given on 9 subsection 5. There are 4 cases of services provided through e-commerce operator. Government feels like the only option to collect taxes will be to collect taxes from e-commerce operator itself. Now first let's look at, so our discussion is only the first category and the fourth category, that's it. Second and third category have normal provision applicable. Let's look at the tax. What is tax collected at source under section 52? Again, please remember, 51 is TDS, 52 is TCS. So first TDS comes, then TCS comes, 51, 52. Similarly, their returns are also like that. GSTR 7 will be under TDS and GSTR 8 is for TCS. The due date and everything will become ditto same. Look at this transaction here. I have given you a very basic understanding. I will give you an example to get you an understanding on what is tax collected at source. Say, this is company called Attenberg. Attenberg is selling their fans through Amazon. Suppose Attenberg is selling a lot of fans through their 5,000 fans that sold through Amazon. Now Amazon will be called as e-commerce operator. Attenberg is the original supplier and the customers will be the final consumers. Okay. Now each fan is costing 5,000 rupees, not 5,000 fans. Each fan is costing 5,000 rupees. Now how the transaction would work? Amazon will show the customer that there is a bill of 5,000 plus say 12% GST on fan, which is 5,000 plus 600 rupees GST. So Amazon will collect from the customer 5,600. Will Amazon be required to pay the entire 600 rupees GST in this case? No. The liability to pay GST remains with Attenberg, the original supplier, because he should be able to take input tax credit. Now Amazon, what is that Amazon will do then? Amazon will the Amazon pay the entire 5,600 to Attenberg? No. Amazon will have to deposit 1% on net value of taxable supply for that month. 1% will be deposited as TCS, which means on 5,000 rupees, 1% would be how much? 50 rupees. Will have to be deducted from 5,600 and this 50 rupees will be deposited by Amazon against the GST number of Attenberg as TCS. Then how much will be paid to Attenberg? 5,550 minus the commission of Amazon. Suppose Amazon takes say 2% commission plus GST. So 100 rupees plus 118 rupees GST. 118 will be taken as the income for the Amazon and 5,432 will be the net that will be paid to Attenberg. This is the understanding of TCS. Now TCS to be done not on transaction to transaction level. TCS is generally done on on a monthly basis. Now let's look at the notes. So if you go to our notes, you will find TCS to be there in the last one of the last chapters. You will find it after payment. Go to page number 188 in your chart notes, you will find this particular topic. Okay, so I hope you guys have go to the page. Now look at this. Now Amazon will pay what is the value of net supply plus taxes minus TCS. This TCS will be deposited against the GST number of suppliers. Supplier will find it in their electronic cash ledger. This is the understanding of that provision. Now this is done on a monthly basis. Look at these few points are very important for you to answer questions in the examination. Number one, it is 1% IGST, 0.5% CGST and 0.5% SGST as the TCS. That's the rate of TCS that they have to do. And TCS is applicable on what? It is applicable on net value of taxable supply. Look at these terms are very important for us. In value chapter, we talk about transaction value. Here we're talking about net value of taxable supply. What do you mean by net value of taxable supply? It is nothing but aggregate value of taxable supplies minus taxable supplies returned to the supplier. Okay. In the end, we can do one. While I'm doing registration in the next session, I will do a question which connects all of this. Okay. Very important question. I've drafted one. Net value of taxable supply means aggregate value of taxable supplies minus taxable supplies returned. Now, does it include taxes? No. Aggregate value only we are talking about, only taxable supply component and minus whatever amount that is returned for that particular month. On that, I will have to deduct 1% or do a 1% TCS and then deposit. What if in a month I have so much of returns of the previous month and very less number of sale? In that net value of taxable supply for that customer, Amazon will have to do this each customer wise for that, each customer in the sense each vendor wise. Each person who is registered as seller in Amazon, they have to do this computation. For each of them, if you look at if the net value of taxable supply for a particular month is negative, there is no TCS to be done, there is no carry forward that is allowed. Okay. Okay, I have a question here. So let's look at the question also. Considering there's amendments, I can just touch upon all of that using this question. Okay. People who are not having this question with you would ideally go and take a screenshot of this so that you can refer this later. Mr. Raju runs an online platform which lists various cosmetic products of various customers. He provides you details of supply made by 2 enlisted cosmetic companies through his platform MyGlam as follows. For 3 months, he has given what is the supply that is made by 2 vendors through his platform, an e-commerce operator. One is Cosmo Private Limited, another one is Organic Private Limited for April, May, June. There is also return. I have given that information as well. Out of the sale of Organic Private Limited for April, 50,000 was exempt product. Okay, so we need to compute what? Net value of taxable supply. That only includes taxable supply, right? The first question is that who is running this platform MyGlam? Mr. Raju. Question number 1, is Mr. Raju required to obtain registration? The answer is yes. Now look at, I'll read the answer for you. Mr. Raju is liable for TCS and he's supplying third-party product through his platform, no? as he is an e-commerce operator supplying third-party product through his platform. Therefore, he is required to obtain compulsory registration under section 24. Everyone who is liable for TCS will have what registration? Section 24 registration. Question number 2. Compute TCS applicable for Raju on the supply above for each month. How, on what value TCS is computed? On net to value. So, for April, Cosmo has a sale of 5 lakh, return of 50,000. So, net value is 4 lakh 50,000 into 1% is 4,500 as TCS. Are you understanding? Second case. For April, what is for Organic Private Limited? Out of 1 lakh sale by Organic Private Limited, if you look at 50,000 is exempt. So, Organic Private Limited will have only 50,000 as taxable supply. Minus the return is 2 lakh. So, it is a negative value that we get. Do I have to do any TCS? No, I don't have to do any TCS for that April month for Organic Private Limited. For May month, it is 1 lakh minus 1 lakh 50 for Cosmo. Again, no TCS because the net value of taxable supply is negative. For June, it is 10 lakh minus 1 lakh, 9 lakh into 1% is 9,000, assuming it is IGST. Then for April, for May, for Organic, it is 6 lakh minus 50,000, 5 lakh 50,000 into 1% is 5,500. For June, it is 2 lakh minus 20,000, 1 lakh 80,000 into 1% is 1,800. Look at the note that I have written. If the net value of taxable supply is negative, no TCS is applicable, no carry forward is also allowed. Then let's look at the third question. Can Raju use ITC to pay TCS? No. Raju is the e-commerce operator. E-commerce operator cannot use ITC to pay this because this is not a payment of outward tax liability for them. Their outward supply is platform charges, and they can only use ITC to set off against the outward tax liability, not on TCS payment. So, TCS payment needs to be paid by cash, which means electronic cash ledger. Look at the third question answer there. Tax payable as TCS cannot be paid by utilizing input tax credit. It needs to be paid by cash, that is electronic cash ledger. Our fourth question is an amendment, very important one, they can test you. A new startup named LIJIL Private Limited, who is unregistered, wants to supply their product through MyGlam. Can they supply through MyGlam without registration? If yes, what is the requirement? What are the requirements for MyGlam? So, they are trying to tell you that there is an unregistered person who is supplying goods through an e-commerce operator. Earlier, there was a restriction on this. They said everybody who is supplying goods through e-commerce operator needs to take compulsory registration. Now, the latest amendment relaxes that provision and says that you can supply through e-commerce operator without compulsory registration. But you need to go take an enrollment number from the GST portal. No need to take GST number, no need to pay GST also, but you need to be enrolled in GST portal. Second one, the e-commerce operator should ensure that they are not making any interstate supply. Let's look at that provisions answer as well. An unregistered supplier of goods is permitted to supply goods through e-commerce operator. Hence, LIJIL Private Limited can supply goods through MyGlam without registration. However, MyGlam needs to ensure, number one, they are not making interstate supply. Number two, they have PAN and enrollment number from GST portal. MyGlam need not do TCS for supply by unregistered person, however, needs to report the same in GST rate. Why they are not required to do TCS for unregistered supply through them? Because they don't have a GST number, unregistered supply. After doing TCS, against what number they will deposit this amount is the question that we will have. Now going back to 9 subsection 5. I told you not in all cases it is TCS that is applicable to e-commerce operator. In some cases the entire tax needs to be paid by them. Page number 43 or similar pages in chart chapter, you will find notified cases of 9 subsection 5. So I want you to go there and then ensure that you have a look at this. Shall we? Okay. There are 4 cases. There are 4 cases. In these 4 cases, the entire tax needs to be paid by e-commerce operator. They are not doing TCS. They are paying entire taxes. Let's look at that. Number 1, services by way of transportation of passengers by radio taxi, motor cab, maxi cab and motorcycle, omnibus or any other motor vehicle except omnibus by a company. Carefully listen to me here. They are saying that if there is transportation of passengers booked by a person through an e-commerce operator, transportation of passengers booked by a customer through an e-commerce operator. What e-commerce operator are we talking about? Uber, Ola, Rapido and all those people. You book, even book, your Make My Trip, Paytm, all of them have transportation of passenger being booked through them. And even you have buses are being booked through Red Bus and all that. Okay. So they're saying that if there is transportation of passenger provided by an e-commerce operator, the entire tax needs to be paid by e-commerce operator. It is understandable because the actual supplier could be like auto rickshaw drivers, the taxi drivers. It's very difficult to collect from them. There's no point in paying 1% to them and all that. So they said entire tax. If you book an Uber, Uber pays the entire tax to the GST department. So 9 subsection 5 is applicable. But they have made an amendment there. They said in an omnibus, if the bus is owned by a company, only TCS needs to be done by the e-commerce operator. But if the bus is owned by an individual other than a company, it needs to be under 9 subsection 5, entire tax needs to be deposited by e-commerce operator. Second case where entire tax needs to be deposited by e-commerce operator is services by way of accommodation in hotel, guest house, in clubs, campsite, etc. But it is a conditional case. What do you mean by conditional case? It says actual supplier is not liable for registration under section 22 of CGST Act. So they are saying that accommodation services is provided by a hotel which is unregistered. Then e-commerce operator, you pay the entire taxes. If the hotel is registered, let the hotel pay the taxes, you pay only TCS. Third case, services by way of housekeeping such as plumbing, carpenting, etc. Here also it's a conditional one. Who does this? Carpenting, housekeeping services. There are companies like Urban Company, Job Boy, etc. Now they are saying that in these cases also it will be under 9(5), or e-commerce operator has to pay the entire GST to the government only if the actual supplier is not liable for registration under section 22. Then fourth case, supply of restaurant services other than the services supplied by restaurant eating joints located in specified premises. Now but the fourth cases that we have here is like the first case, there is no condition. They are saying if you book restaurant services, which means if you book food, okay, all your food ordering apps, Zomato, Swiggy, etc. If you order food through Zomato, Swiggy, etc., the entire tax needs to be paid by Zomato, Swiggy itself. They're saying that this will make the collection much better. And anyway, restaurants do not have any ITC available. So let me bring 9 subsection 5 in these cases. Now let's go ahead and then look at this with an example. Sometimes it might be a little difficult for you to understand if you have not gone through this or is coming from a previous batch of mine. So to help you guys, I will put out the case study here. Okay, I'm summarizing my e-commerce operator provision here. Number 1, transportation of passengers. The actual supplier can be registered or unregistered. They are providing transportation services through an e-commerce operator to the customer. Customer will pay GST also while paying the money to the e-commerce operator. E-commerce operator, you have to pay full tax to the government because it is notified under 9(5). Whether e-commerce operator has to do again TCS? No need to do TCS because full tax is paid by e-commerce operator itself. Second case, accommodation services. Say Taj Hotel, which is a registered supplier, is providing accommodation services through an e-commerce operator like Make My Trip. Now the customer will pay GST to the Make My Trip or the e-commerce operator. E-commerce operator will only do TCS because the actual supplier is registered. So the liability to pay tax here lies with Taj Hotel because they are a registered person. They can take ITC of whatever they have while paying this particular taxes. However, an unregistered homestay is registered with Airbnb and provides accommodation to customer. The customer will pay GST to Airbnb. Airbnb will have to pay full GST to the government under 9(5) because the actual supplier, which is the homestay, is not registered. Same with housekeeping. If there is an unregistered actual supplier, a carpenter who is coming to your house and then doing the work through urban company, and you're paying the charges with the GST to urban company will have to pay entire taxes to the government, not the actual supplier. However, if there is a cleaning agency which has a GST number, is providing their services through a platform called as Joboy and to a customer, it will be the platform called Joboy who will have to do only TCS, and the full taxes needs to be paid by cleaning agency itself because they are registered. So in second case and third case, 9(5) will be applicable only if the actual supplier is not liable for registration. Fourth case, here look at a restaurant. A restaurant can be registered or unregistered. When they provide services through Swiggy to customer, they are supplying food through Swiggy to customer or Zomato to customer. It is Swiggy, Zomato who has to pay entire taxes, whether this whether the restaurant is registered or unregistered. This is to just ensure that the collection is better. All other cases, which means that other than these 4 notified cases, all other cases of supply of goods or services through e-commerce operator will be subject to TCS, not 9 subsection 5. Only notified cases will come under 9 subsection 5. Is it clear to all of you? I request, if this is clear, all of you please come to the chat box and then put a yes or I understood something on the comment section, so that I will know that you guys are with me and then learning well. Now, whenever I am asking e-commerce operator to pay taxes or to do TCS, I am expecting them to be in India, right? But e-commerce operator, since this is completely online, these people can be located anywhere in the world. So they said, if you are in taxable territory, you pay taxes to the government. So e-commerce operator is liable to pay taxes. What if the e-commerce operator has no physical presence? Then I have to ask, like Uber, do you have a representative office? Then that representative office is liable to pay taxes. What if there is no physical presence, no representative office? They are saying that you have to appoint a person for paying taxes. Okay, this is a requirement that you have. So that concludes our discussion on e-commerce operator. Now we can go to composition levy scheme. Okay, composition levy scheme, for me also it's very simple to go ahead and then recap you the entire provision. Okay, so there are 5 things that you have to learn in e-commerce operator. So when you recap, you have to ensure that in composition levy scheme, you remember 5 things. Number 1, if you go for composition levy scheme, what's your advantage? Number 2, is it available to everyone? What's your eligibility criteria? Number 3, is there anybody not eligible? There is amendment here. Number 4, okay, number 3 is actually conditions. Okay, let's swap it. What if you go for this composition levy scheme? What are the conditions that you need to satisfy? What are the procedures that you have to follow if you go for composition levy scheme? Together with this, we have to understand something called as marginal service scheme. Then we are looking into an additional scheme called as 10 to capital A. We'll go ahead and then look at what does 10 to capital A means. Okay, so there is an additional concessional scheme for services. The moment you read composition levy scheme, you can get computational question from composition levy scheme. So ensure that you are fully understanding CLS, and every examination they ask one question. That's their pattern. Now, composition levy scheme, the moment you hear the term scheme, I used to ask my students to remember the term option. If you opt for this scheme, you get certain advantages, 2 advantages. One is your return structure is a little more easier. Then second big advantage is that you get to pay tax at a lower rate. Now, easy tax compliances. Normally, what is the periodicity in which a person would pay taxes under GST? It is monthly basis on or before 20th of subsequent month. But if you are under composition levy scheme, you don't have to pay taxes on monthly basis. You can pay it on a quarterly basis. When will you have to pay taxes? You have to pay taxes on or before 18th of subsequent month from end of the quarter. Then this is done using a statement called as CMP08. Please note, CMP08 is not a return. A return will have the last letter GSTR. Now, there is a return wherein you will have to fill and then give information about your payment, which is only a financial year return. That is called as GSTR4. Okay, so you have CMP08, a quarterly statement, and you have GSTR4, which is an annual or financial year return. So, which means if you are under composition levy scheme, this is your routine compliances. Quarter 1, you make the payment on 18th of July. Quarter 2, you make the payment on 18th of October. 3 on 18 Jan. 4 on 18 April. The financial year is over. By 30th of April, you file GSTR4. But the biggest advantage is this. You get to pay tax at a lower rate. What is this lower rate? If you are a manufacturer, your tax rate is only 1% on turnover in a state or union territory. If you are a trader, it is only 1% on what turnover? Taxable turnover. Now we have a word called taxable turnover here. Then if you are a restaurant, you have 5% GST that is applicable on the turnover. Okay. So the tax rate has been reduced from normally 18 to 28% to mere 1% if you are under composition levy scheme. Then the next question comes in. So please remember, for trader it is taxable turnover. They can test you with that. Then we have another question. Can everybody go for this and then reduce their tax rate? No. There is an eligibility criteria, that is point number 2. Who is eligible for composition levy scheme? Now we have to look at smaller suppliers who will be eligible for composition levy scheme. Now, who is a smaller supplier? Said a smaller supplier means somebody who is having a turnover below certain threshold limit. Now, this limit is again not same for all the states. For the purpose of the limit, we are classifying the states into 2 categories. One is general category, another one is special category. Unlike we are saying in registration we had 3 categories, here we have only 2 categories. Now, if you are in the general category, your limit is 1.5 crores. What is the meaning of this? If your last year turnover is less than 1.5 crores, you can opt for CLS for this financial year. Similarly, in this financial year, after opting, if you cross 1.5 crores, you have to come out of composition levy scheme. However, in Sattanam 3 states, What are the states that we have in Satnam 3? Sikkim, Arunachal Pradesh, Tripura, Nagaland, Uttarakhand, Meghalaya, Manipur, Mizoram. These states, if you are registered, your limit applicable for composition levy scheme is not an aggregate turnover of 1.5 crores, it is only 75 lakhs. Now, aggregate turnover is a turnover on all India basis. For a single PAN, you have to take the all India turnover. While computing aggregate turnover, you have to include taxable supply, exempt supplies, even non-taxable supply, export, interstate supply, but you don't have to include in aggregate turnover GST amount. Your purchase amount will never be part of aggregate turnover even if it's taxed under RCM. Now, RCM turnover will not be considered to be a turnover of the recipient, will be considered to be the turnover of the supplier. Okay, this is a very basic understanding. Then we have an understanding on interest. Interest income, that is interest from loan, is generally an exempt service. Aggregate turnover includes exempt supply also. But to check something in composition levy scheme, we will never consider interest to be part of the computation. Okay. Then there was a question on whether RCM and composition levy scheme has any connection. Suppose I am registered, I opted for composition levy scheme, and I received a service or goods from somebody which is subject to RCM. Will RCM be applicable even to a recipient under CLS? They said yes. 9394 will be applicable to CLS unless specifically excluded. Unless specifically excluded, 93 and 94 will be equally applicable to CLS as well. Is there any places where we excluded CLS? Yes. In security services, we said if the recipient is a composition levy scheme person, it will not be taxed under RCM, it will be taxable under FCM. So, condition number 1, point number 1, advantages. Point number 2, conditions. Point number 2, eligibility criteria. Point number 3, conditions or disadvantages. If you go for CLS, what are the disadvantages that you have? Number 1, supplier cannot collect tax on supply from recipient. You will not be able to collect that 1% from the customer. Say, I am under composition levy scheme. I am making supply for 1000 rupees. Normally, when I make supply, if I am a registered person, I will charge from the customer 1000 plus GST. But if you are under CLS, you can only collect 1000. From your profit, you have to pay this 1%. Government says, I am reducing your tax rate, don't collect that also from the customer. Number 2, because I am reducing my tax rate, government says that my revenue loss also I have to restrict. So, the government says that supplier, if you are under composition levy scheme, you are not eligible for ITC on inward supply. The CLS person will not be able to take ITC on inward supply. Number 3, supplier is not allowed to make interstate outward supply. They're saying as supplier, you're not allowed to make any interstate outward supply. They're saying that the person who is under CLS can only make supply within the state. I cannot ask another state to compensate the losses. But if I'm under composition levy scheme, can I purchase from another state? Yes. Interstate inward supply is not a problem because you don't have a tax rate reduction in inward supply. What is not allowed? Outward supply interstate is not allowed. Similarly, I have 2 branches. One branch I want CLS, other branch I want normal scheme. Can I do that? No. Because the 4th condition says supplier cannot choose CLS, business segment or vertical wise. Your choice is on what level? It is on PAN level. Okay, supplier cannot choose CLS, business segment or vertical wise. The choice is for a PAN level. Are you guys understanding this? Then, look at the 4th point here. Who cannot go for composition levy scheme? They're saying that now we already have seen an eligibility criteria based on the threshold limit, right? Now I'm telling you that some people cannot go for CLS even if their turnover is within the threshold limit. These people are blocked from, these people are blocked from opting for composition levy scheme. It used to be 6 set of people. Now you have 2 amendments there. So now the people count is also increased with 7 set of people. In that 2 amendments are there. Okay. So who will not be eligible irrespective of their turnover for CLS? Number 1, casual taxable person. Casual taxable person will not be eligible for composition levy scheme. Non-resident taxable person will not be eligible for composition levy scheme. Now let's take a quick look at who's a casual taxable person, who's a non-resident taxable person. Let me recap that particular discussion also for you. Now I'll recap it by asking you questions. I want answers on the chat box. Number 1, I'm asking about casual taxable person. Okay, so you have to type the answers on the chat box. Question number 1 would be, is a casual taxable person a resident in India? Yes, he is a resident. Is he having business somewhere in India? Yes, he is having business somewhere in India. Number 3, is he coming to a new state? Yes, he is coming to a new state. Is he planning to do permanent business in the new state or occasional business in the new state? Occasional business in the new state. In such cases, this person will take a registration called as CTP registration. In that new state, is he eligible? In that new state, is he eligible to go for CLS? No. That a person who is having a CTP registration under his PAN will not be allowed to go for composition levy scheme. A non-resident taxable person, let me ask you the same set of questions for that. First, an NRTP, we call them as NRTP. NRTP, is he a resident? Is he a resident? An NRTP, is he a resident? The answer is no. An RTP is not a resident. Is he having any business anywhere in India? No, he is not having any business anywhere in India. Now, is he planning to come to India to do business? Yes. In India, is he planning to come to do permanent business or occasional business? He is planning to do occasional business. Now, he will obtain what registration? An RTP registration. While obtaining an RTP registration in that state, can he go for composition levy scheme? No. CTP and RTP, you people are not permanent in that state is not ready to take your losses, you don't go for composition levy scheme. Then, person supplying goods or service through e-commerce operator. I mean, this is an amendment. Person supplying goods or service through e-commerce operator, they were not eligible for composition levy scheme. Now, under this, now they said, hey, somebody who is supplying goods through e-commerce operator. Okay, look at amendment number 1 here. Amendment number 1. Person supplying goods through e-commerce operator can now opt for composition levy scheme. Why? Earlier, the same amendment we have seen in the registration, we said a person who is supplying through e-commerce goods through e-commerce operator or e-commerce operator need not obtain registration. They can just have an enrollment number. But are these people registered? Yes, they are registered wanting to go for CLS. Earlier, CLS was blocked because if you look at e-commerce operator, they can sell anywhere in India. So they said, hey, e-commerce operator, can you restrict these people from making interstate supply? E-commerce operator said, yes, our technology is so sophisticated now that we can let somebody to do intrastate, somebody only to do interstate. So they said, okay, see, supplier of goods can now supply through Amazon and Flipkart, the e-commerce operator, provided e-commerce operator has capability to only let them do intrastate or capability to restrict them from making interstate supply, because they are not supposed to make any interstate outward supply, right? Then, fourth person who is not eligible is manufacturers. Please note, I have written in bracket, not traders, which means the traders of following products are eligible for CLS, but manufacturers are not. Who are those? Pan masala, tobacco ice cream, we use a code word called as PTI. Fourth one, aerated waters. Fifth one, bricks and blocks. Now, there are 4 types of bricks and blocks that we have listed in there. Fly ash bricks and fly ash blocks and fly ash aggregate, bricks of fossil meals are the similar siliceous earth, building bricks, earthen or roofing tiles. If you're supplying or manufacturing any of this, not traders, traders can still opt, which means I am running a small shop, grocery shop where I'm selling ice cream. Can I go for CLS? Yes, you can, because you're a trader, not a manufacturer. But if you're a manufacturer of ice cream, you will not be able to opt for CLS. Fifth point, person making non-taxable supply. Person making non-taxable supply. Now, there are two types of supply where we term it as non-taxable supply. Number one, ALHC. What is ALHC? Alcoholic liquor for human consumption. Second, HP-MAN, high-speed diesel, petrol, motor spirit, aviation turbine fuel, natural gas. If you're supplying only this, say I'm running a petrol pump, I'm also having engine oil. So some taxable, some non-taxable. I want to register to pay tax on engine oil. After registering, I wanted to go for CLS. You will not be able to, because you are making a non-taxable supply. Government says if your component is non-taxable, I don't want to give you any special rate as such. Then sixth person, they're saying in supplier of service other than restaurants, nobody can opt for CLS. In supply of service, I repeat again, there are a lot of questions that they test on this. In supply of service, only restaurants. In supply of service, only restaurants will be able to go for composition levy scheme. Nobody else. Similarly, a person dealing in specified actionable claims is also restricted from going for composition levy scheme, because to make the online money gaming industry taxable, the amendment that came from 1st October 2023 introduced a new word inside GST law called as specified actionable claims. What is the word that we have? Specified actionable claims. Now, actionable claims includes betting, gambling, lottery, etc. Now, they have added that list little longer. What is that list now says? It says there are 6 activities I want to call as specified actionable claims. There is a very high chance that some theory question or some questions of that sort will come from specified actionable claim. My strong recommendation to all my dear students is that please remember these 6 specified actionable claims. You will be able to write this in the examination very likely. What are those 6 specified actionable claims? Earlier one were only 3, that is betting, gambling, lottery. They've added 3 more: casinos, horse racing, online money gaming. Very interesting note is that online money gaming is actually considered to be an actionable claim. Okay, money game like your Dream 11, MPL, Rummy Circle, etc. Now, all these 6 items are called as actionable claims, and surprisingly enough, in GST, actionable claims, are they called as goods or are they called as services? Comment on the chat box, everyone. Are they considered to be goods or are they considered to be services? Now, they are considered to be goods. Goods includes every kind of movable property. Goods includes actionable claims. Goods includes growing crops or things attached to or forming part of the land which can be severed before the supply. You guys understanding? So, actionable claims are goods. So, there's a question. If I am supplying goods, I can go for composition levy scheme, right? Now, do I want betting, casinos, gambling people to go for composition levy scheme? No, because these are demerited. I have high rate applicable. People will use this occasion to go for CLS and then escape from taxes. So they said, hey, if you are a person dealing in specified actionable claim, you're restricted or you're blocked from opting for composition levy scheme. Is that crystal clear for all of you? That is an additional point. They can frame questions out of all of this. Next, now we have seen a point inside our discussion on person not eligible. The 6th point on the screen says what? If you are a supplier of service, only a restaurant will be allowed to opt for composition levy scheme. So which restricted a lot of them. which restricted a large part of people who are having both goods and service and doing a small business from opting for composition levy scheme. What if I have 40 lakhs turnover of goods, 2 lakh turnover of services? Will I be able to opt for composition levy scheme by this provision? No, because I'm having a small portion of service. These people represented back to GST Council and said it's unfair if you don't give us composition levy scheme because our service is very trivial, very small portion of services. You guys understanding? So what is that it has happened? They said we will give a relaxation. What is the relaxation that you have? They said if you are somebody who is eligible for composition levy scheme otherwise, which means you are a supplier of goods, being manufacturer or trader, if you are a restaurant and you have one more service, which is the reason why you are not able to opt for composition levy scheme. The government says as per 10(1) proviso read with 10(2)(a), if your other service is within a small limit, you can still opt for composition levy scheme. We call this limit as marginal service limit. So what is that limit? They said, I want your service other than restaurant has to be a small service. They said small service means it is higher of the following amount. One is 10% of the turnover in a state in the preceding financial year, or 5 lakh, whichever is higher. Up to that, you can have services and still go for composition levy scheme. Which means what? I can put it like this, up to 50 lakhs of turnover, up to a turnover of 50 lakhs. You can have services up to 5 lakh. Because 10% of 50 lakh is 5 lakh, or 5 lakh, whichever is higher. 5 lakh will always be higher for turnover up to 50 lakhs. If your turnover is beyond 50 lakhs, your turnover is above 50 lakh, you can provide 10% of services other than restaurant, still go for composition levy scheme. You carefully analyze this, guys. Say my turnover is 80 lakhs. I can have 8 lakh of service and still go for composition levy scheme. And my entire 80 lakh will be subject to GST at 1%. That's an interesting note here. Okay. Now, what if I have education services for 10 lakh and interest income, which is 20 lakh? Interest is also an remuneration for providing loan services, right? They said for computing your value of services here, don't include interest into your turnover. That's also an interesting note that they have done. So we can simply put it like this. We can say that interest is basically not included in any computation that we do. So this is what you have to carry for your examination. Interest on deposits or loans or advances. So for interest, it's an exempted supply of services. That's your first understanding. What is the use of interest in computing aggregate turnover? For computing aggregate turnover of registration, interest is included in aggregate turnover. But for any computation in composition levy scheme, any computation, which means the computation can be an aggregate turnover computation, marginal service turnover computation, interest is always excluded. Let me give you one quick question so that you are well aware of an additional provision I want you to learn. Look at this, guys. Mr. Raju in Kochi has multiple businesses. One is mobile trading business, taxable goods, fresh vegetables, exempted goods, preschool till higher secondary, which is exempted services, and loan services, which is also an exempt service. The turnover is 80 plus 60 plus 10 plus 8. But for the purpose of checking aggregate turnover for CLS eligibility, what is not included? 8 lakh interest is not included. So my turnover is 80 plus 60 plus 10, which is 150 lakh, which is less than the threshold limit in the general category states. Now I have to also check, because they have services, whether my service is within the marginal service limit. What is the marginal service limit here? It is 10% of turnover, which is 150 lakh into 10%, that is 15 lakh, or 5 lakh, whichever is higher. 15 lakh will be higher. Now, how much is my service here? Now, Raju has two services, one is education service, another one is loan service, but I don't have to include loan service again. So, my service comparison would be on 10 lakh here. So, my limit is 15, I have only 10 lakh as my turnover. So, can I go for CLS? Yes. Now, how much will be the tax payable if I had the same turnover maintained? Now, if I am a trader, I will pay 1% on taxable turnover. Here, the taxable turnover is only 80 lakh. So, my tax payable would only be 80 lakh into 1%, that is 80,000. So, this kind of questions can also be a challenging question that can come into your examination. Now, you tell me, after all that, who's still not eligible for composition levy scheme in service? Somebody who's providing pure services, which means an IT company, a consultancy firm, a CA firm, these people, a saloon or a beauty parlor, these people are only providing services, they will still be restricted from going for composition levy scheme. Or somebody who's having goods as well as service, and the service portion is above the threshold limit that we discussed in marginal service. Say I have 50 lakh turnover, 25 lakh service, 25 lakh goods. Will I be able to go for composition levy scheme? Absolutely no. So these kind of people are not eligible to go for composition levy scheme. So these people represented back, and then the government came up with an additional scheme for them, which we call as scheme under 10(2) capital A. 2 small letter a is denoting a clause in composition levy scheme wherein 1% tax rate is there. 2 capital A is a subsection additionally inserted, which is talking about a scheme for supply of services. So look at this revision of the 10(2)A. First question that we ask is, who is eligible for this? A person who could not opt for CLS due to being supplier of service other than restaurants, or supplier of goods or restaurant who is also having another service, but that is beyond the limit of the services that we are discussing about. These people can go for, it's an option for them also, they can go for a scheme called as 10(2)A, provided they satisfy one more additional condition. What is the additional condition? Their previous year aggregate turnover has to be less than or equal to 50 lakhs. If they go for this new scheme, what is the advantages that they get? Do they have this 1% tax rate? No, their tax rate is 6%, which means 3% CGST, 3% SGST. For turnover only up to 50 lakhs for that year. So from 1st April to the turnover becoming 50 lakhs, they can go for this and then pay only 6%. So services average rate in GST is 18%, getting reduced to 6% is still a benefit. Then look at this. What is the condition if they go for the same condition as CLS? CLS had put 4 conditions, if you remember. You cannot get the 6% from the customer. You will not be able to take ITC on your purchases. You can't make any interstate outward supply. You cannot choose this business vertical wise. You have to either go for all the branches or go for no branches. You cannot do this branch wise. Then, person not eligible. There are certain people who are not eligible for this. This is also the same list except for supplier of services. For them only the scheme is there, which means CTP and 7 people were there. CTP and RTP, person supplying service through e-commerce operator, goods can now. Then 4th one, manufacturers of PTI and bricks and blocks, person who is supplying non-taxable supply. Then the last one, who is dealing in specified actionable claims. These people are not eligible for composition levy scheme for 1% concessional rate. They are also not eligible for 10(2)A, the 6% concessional scheme either. Okay, for both of them, both of the cases, they are blocked from going for that. Then there are special points. Point number 1 is something very simple. We know that interest or discount will not be included in aggregate turnover even here. What if I go for the scheme in the same year in which I am taking registration? Till I take registration, there is no GST payable. From the time I take registration to total turnover up to 50 lakhs, I will end up paying concessional rate. Beyond 50 lakhs, I will have to pay normal rate. For this, you might require a small explanation just to ensure that you are able to write the answers to a question. Look at this example on the screen. Mr. Raju is planning to start a saloon, which is a supply of service. Normal rate for saloon is 18%. He is planning to start his saloon on 1st July 2022. Suppose he started his business on 1st July 2022. Immediately he need not register, because for supplier of services there is a threshold limit for registration, that is 20 lakhs. So Raju did his business up to 20 lakhs on till 31st of October, no registrations or no GST. Now while taking registration, he cannot go for CLS, but he can go for 10-2A, because the additional condition is that previous year turnover has to be less than 50 lakhs. This year only starting business, is that condition is satisfied. Now the question that we have is, can he take the 10-2A scheme and then go for another 50 lakhs at 6%? The answer is no. Your whatever turnover that is already done while you are unregistered, 50 lakhs minus that is the turnover that you can go for concessional rate, which means 20 lakhs turnover is already done. So another 30 lakh only you can do for concessional rate of 3%, CGST, SGST. There will never be IGST, because they are not allowed to make any interstate outward supply. Then, beyond 50 lakhs, after 31st December, your turnover exceeded 50 lakhs also, then you'll end up paying the normal rate, which is 9% and 9%. So you can get questions like this, where they'll ask you to compute what is the total GST for that year. There is an unregistered period, there is a concessional period, there is a period which is having normal rate. These used to be like a 2-3 mark questions, while they test you in the examination. So please be aware of this. Now, before I go into procedures, I wanted to give you a quick recap on the documents. So I want to discuss the documents that you need to understand so far. First one, there are 3 very important documents that we have in GST. One is a tax invoice, another one is a delivery challan, another one is a bill of supply. Tax invoice is issued by a registered person when tax is charged on the supply. So the bill, when it has GST inside it, will be called as tax invoice. Now, if you are making a stock transfer and it's not even a supply, no invoice is issued. In such cases, to substantiate the movement, to show a proof during the movement, you issue a document called as delivery challan. So, supply, taxes charged, tax invoice. Not even a supply, still movement, there is delivery challan. Then there is registered person. He is making supply only, but he is not collecting taxes, because he is not allowed to collect, because he is under CLS or 10-2A. In such cases, he cannot issue tax invoice. There is an additional document called as bill of supply that needs to be issued. You're supposed to have an endorsement on top of it. You have to put it on public notice that you are a CLS person. When can I opt it? If you are already registered person, you have to opt it before start of the financial year. If you are a new registration, together with the registration form, you can obtain. Should you register every year? No, required. You can actually obtain 1 year, until you satisfy you will be under CLS. But if you want, you can voluntarily withdraw, or if there is any condition is that you are breaching, like turnover limit or making interstate supply, you have to give an intimation within 7 days and then go out of the scheme. If you are not eligible but you still availed it, government will not be able to know, right? But later government got to know that you were not eligible but you enjoyed the benefit of the composition levy scheme, you will be called to have an irregular availment. They can charge GST plus a penalty from you under section 73-74. That concludes our discussion. So we have done advantages, eligibility, person not eligible, conditions, procedures, marginal services, 10-2A. All of these are over. Are these clear to all of you? Can I have a quick yes from everyone, please? If you're liking the revision, you should definitely go and like the video so that it will go to more of your friends and all of them will be having use of it, and the video will be available in this channel, so you will be able to send the links to your friends and they'll be able to watch it, because you have 2 more days available. So anytime anybody feels okay, I need a quick revision on this chapter, so somebody can comment and put also at some point when you watch, okay, this is the point where it starts with this topic likewise. Okay, then I can put a structure for that. The video will be here till your examination is over. Okay, so let's go ahead and then move to the next chapter. Which is the next chapter that you want me to recap? Value of supply. Shall we go ahead and then do value of supply? Place of supply, I have already kept it for the next session. The 7 o'clock session includes place of supply as a discussion. So, place of supply, when I discuss, I wanted to discuss together with, I wanted to discuss TDS also. That's why I'm keeping it there. Now we'll do value of supply. Okay. moment. For your value supply chapter. Okay, so let's get started. Okay, so value of supply is nothing but so it is given in section 15, so you should remember section 15 for sure, but I'm pretty sure you'll all remember that. Value is nothing but transaction value under section 15.1 plus items to be included in 15.2 minus discount under section 15.3. And you have to have two conditions satisfied for you to take the value. The supplier and recipient should not be a related person, and it should not be an exchange case, which means that the price that is paid should be the only consideration. Interesting enough, since you don't have valuation rule applicable for your exam, their all questions would be, they will not be a related person, there will not be a case of exchange. So it's understood. Next, what we are going to do with this chapter, we will quickly look at the provisions in 15.1, 15.2, 15.3. Then we will do one question. I mean, like, we will go through one big question. I have picked up one question while discussing, in the classes, and I said this is something that you should try the day before the exam, because you will understand everything relating to valuation while you do this particular question. We'll do that question also. Okay, that's our thought. What is transaction value? You have to remember, in value chapter, if at all there is a question on value alone that comes in, computation of taxable value, you should be able to recap and remember all the wordings inside the provision. So it's best for you to understand what is 15.1, 15.2, A, B, C, D, E, all of them. 15.1 says transaction value is the value. What is transaction value? It is the price paid or payable for the supply. It is price paid or payable for the supply. Whatever notional, so in a lot of cases they will give you some expenses that is incurred by the supplier but did not collect it from the customer. I waived that. It is not payable. Should I add it to the value? No, that is what the note says. It says notional amount which are waived and not payable to the supplier will never be added to the value. It's a very basic understanding we have. Okay, then this saying, if at all you have collected any of this amount from the customer and you argue that it should not be added to the value. They say specifically these things needs to be added to the value. That's your understanding. Okay, so let's look at this. What are the things to be, if you have not included in value, following things has to be included in value is the understanding. First, items to be included in value of supply if not already done. Clause A. Taxes, duties, cess, fees and charges levied under any law other than GST and GST cess, if charged separately by supplier from recipient, should be added to the value. In an examination perspective, you basically get 3 taxes like this for your exam. Excise duty on tobacco. If you look at tobacco, you have both excise duty as well as GST applicable, right? So, when you are computing value for the purpose of computing GST for tobacco and tobacco product or narcotics product, all of them, it's all demerited product. Okay, so these products do have excise duty still continuing. So, we have to add value plus excise duty and then add GST. That's the thought. Municipal taxes should be added to the value, then add GST. Entertainment taxes by local authorities still not merged under GST. These things have to be added to the value. So, when you are computing GST on movie ticket value, entertainment taxes on top of it, GST has to be done. There's a circular clarification that we have there. What is that circular clarification says? Let's look at that. Look at the circular. TCS under Income Tax Act. We are not talking about TCS under GST. We are talking about TCS under Income Tax Act. They are saying it does not have the characteristics of taxes mentioned above, not to be included. So, if I am buying a car, the dealer of the car will collect 1% of TCS under Income Tax Act from me, but that has nothing to do with the car. So, while calculating value for computing GST on the car, don't include income tax TCS inside it. When I say taxes other than GST to be added, I don't mean income tax TCS to be added to the value. That's the clarification we have. Can be tested, not tested, but they can be tested. So, mark this as important for you, for your computational purpose. Even in your MCQ case studies, they can ask you this. Then, Clause B. Direct third party payment by recipient on behalf of supplier in relation to supply should be added to the value of supply. Again, I'll repeat this. We're talking about direct third party payment by recipient on behalf of supplier in relation. The amount that is to be paid to the supplier is asking me to pay to a third party. If I pay that third party some amount, if that amount was relating to my supply, should be added back to the value. C. Any incidental expenses incurred by the supplier. Any incidental expenses incurred by the supplier spend some money. Why? In relation to the supply, till the goods are ready for delivery for providing me the services. And finally, in the bill they separately shown these expenses and collected from the customer. Hey, that is part of value only. Now, in the examination perspective, you get a lot of incidental expenses. What are they? Put it here. Incidental expenses tested in examination. Packing charges, testing charges, inspection charges, installation charges, weighman charges, warranty, even additional warranty, sales commission, commission that is collected, commission that is paid by the seller to a third party and collected from the customer, sales commission, cost of instruments specially purchased for supply. All of these are examples which needs to be added to the value. Okay. When will I add it to the value? These will be added to the value only if I collect it from the customer. Packing charges, 1000 rupees product, I add 100 rupees from my customer, I am collecting another 100. Then I will add it to the value. Likewise. Okay, so remember incidental expenses. So clause A, taxes, clause B, direct third party payment, clause C is incidental expenses. Clause D, a lot of questions. What does clause D says? They say interest on delayed payment of consideration. I made a supply. My customer is paying me delayed. Now I am asking my customer to pay together with interest. That interest will also be subject to GST. Two notes that needs to be understood for that. Note number 1, such interest, late fee, penalty, etc. will have a separate time of supply. The time of supply for interest, late fee, penalty will be under 12(6) and 13(6). What is it? They're saying the date of payment of interest would be the time of supply for such interest. January month, I made a supply. I am supposed to pay GST to the government for the supply. I am the supplier, okay, on or before 20th of February, right? Now, the customer delayed and paid me the money only in August. That's like 8 months after. I have to pay GST even on that interest paid, but I cannot pay the GST on the interest in January itself, right? I will pay GST only in the month in which I received that interest. They said time of supply for interest, late fee, penalty will be a separate date, that is the date of payment of such interest. In a question, if the question does not telling you that everything is excluding GST, we will always assume the interest is a lump sum amount. What do you mean by lump sum? The only amount I collect, I don't collect interest plus GST, I collect interest and that is including GST. So it is generally assumed that interest, late fee, penalty for delayed payment of consideration is an inclusive amount. So I need to separate that from the amount of interest I collected. I should separate two things. One is interest, another one is taxes. One is value, another one is taxes. How do I do it? Interest multiply with 100 divided by 100 plus GST rate. Interest is a complicated discussion in GST. Okay, we have del credit agent, circular clarification and all that. Before that, let me make it very simple for you to recap our interest discussion. What do you mean by interest? Interest on delayed payment of consideration. What do you mean by interest on loans or advances? Is interest on loans or advances same as interest on delayed payment of consideration? Absolutely no. Interest on delayed payment of consideration requires some supply first to be made and they are delaying the payment of that. But interest on loan means what? I have not made any supply, I gave the money. If there is interest on delayed payment of consideration, it can also be called as penalty, late fee, etc. There is an underlying supply of goods or services and supplier is collecting interest for delayed payment of consideration. That will be considered under 15(2)(d) and it will be added to the value. I am giving an example. Mr. Raju supplied goods for 1 lakh plus 12% GST, 1,12,000 rupees. Term is net 50 after getting the bill. Within 15 days, you make the payment. This Mr. Rahim, the customer, did not make the payment within 15 days, paid only after 60 days. So I asked them, you pay me 1,12,000 plus 1,000 rupees interest. This 1,000 will also be taxable in the end of Mr. Raju because that is interest on delayed payment of consideration. However, if there is an interest on loans or advances, look at the second part, interest on loans or advances. Interest on loans or advances is actually dealt in notification 12/27, which is exemption. What is an interest on loans or advances? An independent transaction of giving loan, getting interest plus principal at some point, right? Consideration for a separate independent activity of giving loans or advances called as interest on loan. Now, it is a compensation for time value of money. In GST, interest on loan is exempt, but interest on delayed payment of consideration is added to the value. Are you guys understanding this? Can I have a quick yes? Then, now look at the time of supply perspective. There is single supply multiple date structure for most of the supply. That's why we have this thing called time of supply, right? Now I'm saying that for interest that is received after 5-6 months while they make the payment of consideration, the time of supply has to be a different date. Now let me give you an examination tip. You have to carefully read it with me, okay? When an exam question has interest on delayed payment, you have to check the following. Number 1, is the question specifically talking about GST is excluded or not? If they did not specifically talk about GST is being excluded, we will always make an assumption that interest is including GST. Number 2, we have to check the month in which I received interest and the month in which I made supply, are they both same? Then no problem. If it is different, I have to make 2 computation of GST. One is for the month in which I make the supply other than interest, the month in which I received interest. Point number 2, check if the month in which interest is paid is given. Then compute value of supply, GST payable, time of supply, due date separately. Now when there is interest I collect, I would have already issued invoice at some point, right? My invoice issuing is already over. Now for the purpose of this interest, what document will I issue? I will issue a document called as debit note. Okay. Debit note is issued when interest on delayed payment of consideration is received by supplier. Invoice is already issued, value in the invoice is less than the actual value because I want to add interest also on top of it. So supplier will issue a debit note to the recipient. Now let's look at subsidies. Subsidies can be 2 types. I'm not talking about government, non-government. I'm saying subsidy can be a direct subsidy, which means a subsidy on the sale, subsidy which has some link with the product I sold. If the subsidy is linked to the price and is on the product I sold, that is the only subsidy which will be considered under clause E. Now, if the subsidy is on sale, who will give you subsidy? Subsidy can be given by your head office, your holding company, CSR subsidy. Government subsidy is a very common subsidy. They said government subsidy is not treated as consideration. If the product price is 100 and government gives you 10 rupees subsidy, GST is paid only on 90. Government subsidy can be reduced to from value, but only what subsidy? Product subsidy. Government gave you money to set up a factory. Government gave you money to purchase machinery. These are not subsidy on the sale. Okay, so that cannot be done. Then, if it's a non-government subsidy, even if the non-government subsidy is on the product, you cannot reduce it from the value. It cannot be reduced from the value. If it's already reduced, it needs to be added back to the value. This is the provision. Subsidy which are not directly linked to the price, government or non-government subsidy, both of them are ignored in computing value of supply. Only linked subsidies are looked into. Now, delivery at buyer's premises where supplier is arranging for transportation and insurance as a part of a contract. We call this as free on road contract. If the supplier says that, hey customer, I will deliver the product at your location, which means supplier incurs the product cost plus transportation cost plus transit insurance. In GST, we treat this as one single supply. The tax rate applicable for transportation is not transportation charges tax rate, it will be the goods tax rate. It is a composite supply of goods, delivery and transit insurance. Principal supply will be the supply of goods. So the value of freight, transit insurance will be added to the value of goods. So 10,000 worth of goods, 1,000 rupees delivery charges, 500 rupees transit insurance, 11,500 will be subject to GST in the rate of the goods itself. I said value under section 15 is nothing but transaction value under 15.1. Item if not already included, these are the things to be added back to the value, right? Minus whatever discount you have given. What kind of discount can be reduced from value? They said there could be 2 types of discount, 15.3a, 15.3b. 15.3a talks about discount that is given on or before the time of supply. It can be reduced from value provided separately recorded in the invoice. If you have a discount that is given at the time of supply or before the supply, you can show that in the invoice itself. But what if the discount is given after the supply? Which means I have given you the invoices, later I am giving you a discount. It can also be reduced provided 3 conditions to be satisfied. Number 1, the discount has to be existed at the time of supply, cumulative condition. Number 2, I should be able to identify to which invoice I gave this discount, specifically linked to the relevant invoice. There is an agreement at the time of supply itself that in the future I'll give you a discount, like a cash discount. You make the payment within 15 days, I'll give you a discount. I can now identify the invoices. Now, if the discount is reduced from the value of the supplier, corresponding ITC needs to be reversed by the recipient. That's a third condition. ITC on discount is reversed by the recipient. Okay. So, both the discount can be reduced, but you have to look at which discount is eligible for reduction. Now, let's look at a question. Okay, we'll look at Single Brothers question. One question I'm taking from our question bank only. That question bank is value chapter. If you go question 23, you will find Single Brothers question. That's what we are going to solve now. Just to get you an idea on how you should present that particular answer. But that's one question which will give you overall understanding of everything. Look at the question on the screen. Single Brothers, registered in Uttarakhand, has supplied 30 tons of chemicals at 50,000 per ton to P of Uttarakhand on 8 September question. They are asking you to compute at the end. You are required to calculate GST liability in this case and due date of deposit. Assume that rate of GST to be 18%. Page number 137 if you have the question bank with you. Thus is saying Single Brothers, what is the taxable value, what is the GST liability, what is the due date. These many things they are asking you to compute. First, to compute tax liability, you need to compute the value. Here there is no ITC involvement, so we will just compute the value, then apply the GST rate, and we will check the due date also. Okay, there must be something additional that we need to look at. Okay, that will be the only thing. So, Single Brothers registered in Uttarakhand supplied 30 tons of chemicals of 50,000 per ton. 30 into 50,000, 15 lakh would be the transaction value. This is supplied to P of Uttarakhand also. This is an intrastate supply for the time being, but in a question from May exam, like 9th of May exam, they will also give you a place of supply related point in here. They will say that P has installed this in Haryana or P has installed this in Andhra Pradesh. Then 10(2)D will be applicable for you. Okay, so 10(1)D will be applicable for you. 10(1)D says that it will be the place where it is installed. In IGST Act, place of supply provision says if the goods requires installation, place of supply will be the place where it is installed. That kind of provision might be clubbed with this. Okay, so please be aware of that. Now, in this particular question, the transaction value is 15 lakh. So, we will have to write a table and we will have to write computation of value of supply for Single Brothers. List price is 15 lakh, working note number 1, transaction value we will write 15.1. Then, what is the other things that is collected? They said apart from this, invoice is also issued on same date. If invoice and delivery is on the same date, which means that time of supply would be 8 September itself. Okay, so it's considered to be a 8 September. See, I have marked it as day before the examination. It's an 8 to 10 mark kind of a question. You have to work it out. Then, the invoice for the supply is also issued on the same date. Further, following additional amounts were also charged from P. Freight is 1,80,000. We said if there is freight, it means that it's a contract where delivery is also promised. It's a composite supply, so I have to add that. Packing charges 1,10,000. It's an incidental expenses. I have to add that. Weighing charges 20,000, it's an incidental expense, I have to add that. Cost of instruments specifically purchased, it's an incidental expense, I have to add that. So apart from 15 lakh they collected additional amount, all of that has to be added to the value. Okay. Then as per the terms of the contract of supply, Single Brothers is required to get chemical inspected by an independent testing agency before delivery of the same to P. P has paid such inspection charges amounting to 12,000 directly to the testing agency. So this is a direct third party payment. So this also needs to be added to the value. Then Single Brothers received 50 lakh as subsidy from state government for setting up chemical manufacturing plant in Uttarakhand. Is it a direct subsidy? No. This is a subsidy not directly connected to the sale price, so I will ignore this subsidy. P is required to make payment within 15 days of supply in terms of the contract. However, P delayed the payment of consideration and made payment in November. So thus paid 15,000 as interest. Should I add this interest also? Yes. But this question does not say everything is excluding GST, everything is exclusive of GST. So we would assume that whenever there is an interest and nothing is mentioned, this 15,000 is including GST. So look at how this will be presented. 15 lakh plus freight, 1,80,000. Freight, I'll write section 8, composite supply as the working note. Packing charges, weighing charges, cost of instrument, all of them same working note. See, I have written 333 as working note reference. That it's all incidental expenses and has to be added to the value under 15(2)(c). Then cost of instruments, after that inspection charges, that is another working note because it's a direct third party payment. So I have added that also but given a separate working note. Look at subsidy, I have mentioned there and written a working note and excluded that. I have done a total before interest because interest will have a separate time of supply. So 21,32,000 is the value before interest, which will have a time of supply of 8 September. But interest is paid in November. But interest we will assume to be including GST. So 15,000 interest into 100 divided by 118. So 12,712 would be the value. So the total value of the supply including interest would be 21,44,712. This will be the answer for the first part. But the question is asking you GST liability and due date. Please note, in this question there are two due dates because interest will have a separate time of supply. So for value excluding interest, that is 21,32,000, CGST is GST because it's an intrastate supply. In another question, the supply can be interstate. 9%, 191,880, 191,880. The time of supply would be September and I have to write a working note for that. And due date would be next month 20th, which is 20th of October. And interest value would be 12,712 because 15,000 into 100 divided by 118 is what I have got. CGST is GST again 99%, but the time of supply for interest is the date of payment of interest, which is 12 subsection 6. So November would be the time of supply for interest and due date would be 20th of December. So sometimes whenever you have, that's why in that examination tip I told you that whenever you have a interest, always look at is the interest a different month. Then you compute value, GST, time of supply and due date separately. That's why I have computed that separately for interest. Now all of this would require working notes. You can either take a screenshot of the working notes if you don't have, otherwise you can look at our notes. You will find the working notes with you. Okay. See, in working notes, since all the provisions are from CGST Act, I have written a common word, all provisions are from CGST Act, so that I don't have to keep repeating the same wordings again. You guys understanding this? Okay, so this is the computational question that you can have from value of supply chapter. Okay, now we have few circulars to do in value of supply, which are very important one. Some amendments also can be tested, but we will do that after we take a quick break. You know, it's been a longer session, so I'll give you some time to recap, but I'm strongly requesting all of you, we will start with value and then we will slowly move to time of supply. It's a quick recap I can do with time of supply, then we'll go to ITC chapter. Okay, so whatever time permitted, we'll use it for ITC chapter. I'll recommend you guys to share the link of this live on your WhatsApp status so that all your friends, whoever wants to look at some revision, faster revision, will be able to. Definitely please share it to all our batchmates so that they will be able to make use of these classes. Okay, so we'll take a 10-15 minutes break now. Can we resume? Can you guys confirm me on the audio and video? Okay, so let's get started with. So sales promotion schemes is the next discussion that we wanted to have. This is just an extension of whatever discussion that we had with discounts. Okay, so sales promotion scheme talks about the circular, which is 92, talks about 4 type of sales promotion methods. Out of that, the first two is relating to samples and buy one get one free. This one is relating to discounts. The circular clarifies you how discounts should be treated in GST. It talks about 2 type of discounts. One is a volume based discount, another one is called as post supply discount. They're talking about 2 type of volume based discounts. One is buy more save more. Buy more save more is saying like if you buy one item I'll get 20% discount, another buy item I'll give you 20% discount. You buy more than 10,000 I'll give you an additional discount. So these are discount given at the time of supply. It's generally adjusted through invoices and it can be reduced from value without any doubt. The discounts upon achieving volume targets periodically, which are discounts like a target based discount. Say for example discount me saying that I'll give you a discount if you reach a sale of like 1,000 items. That's called as discount upon achieving volume targets periodically. Now these discounts are generally given only after you reach the target, but you get this discount for all the previous quantity of item that is being sold to you, right? So these are discount that is given after the supply, but generally agreed upfront, because these are not such prices. These are agreed discounts as an incentive. So it is generally agreed upfront. It can be reduced from value provided all other conditions. How many conditions are there in 15(3)(b)? 3 conditions existed that we have clarified. Should be specifically linked to an invoice, and another condition is that the ITC on the discount needs to be reversed. So if these conditions are satisfied, it can also be reduced from value. Then post supply discount. What is a post supply discount? These are discount that is not existed at the time of supply. Later I gave you a discount. Okay, so the discount given after the supply which is not existed at the time of supply is called as post supply discount. Just to adjust the amount of payment, you might issue credit note as a commercial document, but credit note will never be a GST document. You cannot reduce the post supply discount from the value because it does not exist at the time of supply, which means it is not satisfying the conditions. This is the clarification we have. Then GST on EMI transactions, it talks about, say there are 2 ways in which we can analyze this. I will give you an example to analyze it better. Look at this. You go to a shop and you want to buy an iPhone. You ask the shop, do you have an EMI facility? The shop says, yes, we have an EMI facility. So 80,000 worth of mobile phone, you instead of paying 80,000, you pay it over 8 installments of 11,000 each. So in total, you will end up paying how much? Not 80,000, you will end up paying 88,000, right? So this 8,000 that is collected extra by the supplier, should it be added to the value? They said yes, it is 15(2)(d) interest. However, a lot of companies will not provide EMI like this. They'll say that we will tie up with somebody who knows how to give loans. So say MyG, which is a supplier, is saying that we have tie up with Bajaj Finserv, which is a consumer finance company. So any customer who's coming to MyG, you guys can actually take the phones on EMI facility, but MyG will not give you EMI facility. Instead, the EMI facility will be given as an independent activity by Bajaj Finserv. So if you avail EMI facility, you will not pay money to MyG, you will pay money to Bajaj Finserv, but you will end up paying 88,000. But MyG gets 80,000 directly from Bajaj Finserv. So MyG is not getting interest, so that will not be added to the value here. However, the interest that is paid by Raju to Bajaj Finserv will be treated as a interest on loan facility. So here Bajaj Finserv is doing an independent activity of giving loans, and that will be added to, will not be added to the value of supply of MyG, rather will be treated as a value of supply for Bajaj Finserv for the activity of giving loan. And we have already seen that giving loan and getting interest is an exempt supply. So that exemption will be applicable to Bajaj Finserv's interest. This is understanding of EMI facility. Now there are a couple of more circulars. That one circular I want to teach you is on no claim bonus. I will take you through the notes for that. This was an amendment for the last exam. They did not test it, so I'm expecting there could be some questions on top of this for this exam. So I would like to explain this also to all of you. This is a clarificatory circular on no claim bonus, and this clarificatory circular addresses two issues. Issue number one, the question that they are asking here is the no claim bonus treated as a consideration for services provided by insured to insurance company? In your textbook, you will find this in supply chapter. I have given this in supply chapter near to consideration. I have given a point on no claim bonus. So if you are referring our books, go to supply chapter and refer that. Or you can look at the screen and then just get an idea, and then later look at our notes to get better idea on this. Okay. So I'm hoping that you have something to scribble. Okay, I know this, I don't know this. That kind of a structure should be there with you. Whatever I'm explaining that you are well aware of it, you can just tick, okay, this is something that I know. Something that you feel like you have to go through again, I'm strongly recommending you that you write a note on that saying that please go through again. You still have 2 more days available with you, so you should be taking that efforts. Okay, so there are 2 questions that we are addressing about no claim bonus. Question number 1, is the no claim bonus a consideration for services by insured to insurance company? The one who has taken the insurance is called as insured. Is no claim bonus given by the insurance company because insured is providing some services to insurance company? It's a very absurd question, but that's the question they're trying to answer first. Second one, normally the no claim bonus will be available as a reduction from whatever insurance premium that you pay. So can this no claim bonus be reduced from value as a discount under section 15(3)? This is the second question they are asking. Okay, so to understand the first question and the second question, you should understand what is no claim bonus. No claim bonus is the amount provided by the insurance company to the insured, the one who is taking the insurance, because they did not make any claim. So I have taken a car insurance last year with 25,000 insurance premium. I did not make any claim, so I'm a good customer. So the next year when I'm paying the insurance premium, the insurance company is giving me 5,000 as claim, no claim bonus. I got this bonus because I did not make any claim. So we call this as no claim bonus. Now, if you look at an additional provision from section 7 subsection 1 capital A, which is schedule 2, which talks about activities which are deemed as supply of goods or supply of service. In that para 5E specifically points out a point called as deemed supply of service. What is deemed supply of service? Agreeing to an obligation to refrain from an act, to tolerate an act or situation, or to do an act is treated as a service. Okay. So they're saying if there is an agreement to not to do something, or to tolerate an act or a situation, or to do an act, agreement to refrain or to tolerate or to do an act, it is treated as supply of service. So in similar fashion, don't you think the insured got the no claim bonus because they did not claim? So having an agreement to not claim is the reason why they got no claim bonus. If you analyze it in that order, can we say that insured provided the service of not making claim and then received this no claim bonus? Absolutely no. Why? There is no obligation at all, first of all. So to call this a service, there should be an agreeing to an obligation. Did the insured agree to the insurance company that I will never make an insurance claim? Then why are you taking insurance? So there is no agreement as such that we have. Okay, agreeing to an obligation, that point is not there. So the circular clarified that there is no obligation from the part of the insured to not claim insurance because they received no claim bonus at the end of the year. Therefore, no claim bonus is not a consideration for refraining from claiming insurance. So it is not treated as a supply of service by the insured to the insurance company. Then what is it? It is merely a discount that is given in the next insurance policy because you did not make a claim in the previous insurance. Can this discount be reduced to from value? Yes, because this is a discount that is given at the time of supply. At the time when you are entering into a contract next year, you get this discount. So such no claim bonus given by insurance company to insured as a deduction from the premium can be considered as a discount under section 15(3). Since such no claim bonus is mentioned in the invoice, it can be reduced to from value under section 15(3)(a). Are you guys understanding this? Is it clear? Okay. Now let's move to input tax credit chapter. Okay. Then we'll go to maybe input tax credit chapter is too much for the time that is left for the session. We'll go to time of supply itself. Time of supply is one of the easiest chapters, but you'll have to remember a little bit here and there. That's all, right? So time of supply basically talks about 3 sections. Out of that, 2 sections are only applicable for you in your examination. So you have to remember, please note the same similar section numbers are repeated in IGST also. Please don't get confused. Time of supply is a concept that is discussed in CGST Act. The only concept that is discussed in IGST Act is place of supply. Section 12 and section 13 of CGST Act talks about what is time of supply. Section 12 talks about how do you determine time of supply for supply of goods. 13 talks about how do you determine time of supply for supply of service. There are 5 subsections that you can see which is there in both section 12 as well as there in section 13. Now subsection structure of section 12 and 13 are the same. 12 subsection 2 talks about time of supply for supplier, which means if the supply is under FCM, time of supply will be determined under subsection 2. For a supplier of goods, it will be determined under section 12 subsection 2. For supplier of service, it is determined under section 13 subsection 2. Then for recipient, it is determined under subsection 3. So if it is taxed under RCM and it is RCM for goods, it will be 12.3, and if it's RCM for service, it is 13.3. Subsection 4 of 12 as well as 13 talks about voucher being used for goods or services, to purchase goods or services. If there is a voucher used, then there is a different time of supply. Subsection 5 is merely a residual provision which says if you are not able to determine time of supply by 2, 3, 4, use subsection 5. Subsection 6 is something that we have already discussed. We said when there is an enhanced consideration by interest, okay, for delayed payment of consideration or late fee for delayed payment of consideration, that date of payment would be the time of supply. That is given in subsection 12. For if there is a delay for payment for goods, then it is 12.6. If delay for payment of service, it is 13.6. It's very straightforward. See, basically we have given this point in a chart which basically comprises of 4 charts for you to learn, which is very simple, straightforward understanding. I first need to tell you what is the basics of time of supply. It says the person who is liable to pay tax, what is the date that he or she has control over, that would be treated as the time of supply generally. Whatever may be the time of supply, next month 20th will be the due date of making payment to the government. If you delay beyond 20th, you will end up paying interest. That's why the time of supply concept becomes relevant and important for us. Now, if you are looking into supplier of goods, 12 is what is dealing with goods. Supplier will come under FCM, so 12 subsection 2. It says time of supply is earlier of these 3 dates: date of invoice, due date of invoice, and date of receipt of payment. But date of receipt of payment is omitted. Date of receipt of payment is not omitted in specified actionable claims. Why? Specified actionable claims are goods, but government wanted to collect taxes as and when you make payment to Dream 11, as and when you make payment to a casino, as and when you make payment to a betting. So they said for specified actionable claim, if you make a payment, that will become time of supply. Other than that, other than CLS and specified actionable claims, you don't have to consider date of receipt of payment into your computation at all. Then time of supply would be merely earlier of invoice date or due date of invoice. Now, due date of invoice is given in section 31. There are multiple provisions in section 31 which talks about due date. General provision for goods is given in 31 subsection 1, which says what? When should I issue invoice? I have to ask the question whether transporter is involved or not. How are we asking that question? The provision says whether supply involves movement of goods or not. If the answer is yes, if it involves movement of goods, due date of invoice, the supplier, hey supplier, you have to issue invoices before you remove the goods for supply. It's the date of removal of goods for supply. If there is no movement as such, then due date of invoice would be the date of delivery of goods or making goods available to a recipient. The provision of making goods available to recipient is applicable only if goods are delivered unfinished. So they're saying if the goods are delivered unfinished, you make the goods ready and then that will be the date on which you have to issue invoices. It's a very simple, straightforward understanding. What about services? For services, it says like this. Very similar provision it's saying. What is it? You have to ask the question. So in goods, what is the question we have asked? Did you issue invoices before the due date? Yes, then date of invoice. If not, due date. Here also we have to ask the same question. But we don't have a complicated invoice due date there. So if it is service supplier, what is the provision that will be applicable? If it's service and time of supply, it's section 13 that I'll apply. Because it is supplier, it's a subsection 2 that I'll apply. 13.2 says, same question I'm asking. Hey supplier of service, did you issue the invoice within the due date? Then I have to ask the question, what is the due date? In services, in goods, I told whether there is transporter involved. If transporter is involved, then date of removal. If not, date of delivery. But in services, there is no transportation. So they said after receiving the service, or after providing the service or after completion of services, you have to issue the invoices within 30 days. If you issue the invoices within 30 days, then time of supply would be invoice date or payment date, whichever is earlier. So here payment date is not omitted. But if you don't issue invoices within 30 days, then time of supply would be date of completion. When did you complete? From that date I'll compute, compare with the date of receipt of payment, whichever is earlier I'll take. Now, in case of banking company, financial institution, NBFC, insurance company and all, you can issue invoices within 45 days. They have not tested this. At some point they can give you a question of time of supply and suddenly there is a bank there. So don't take 30 days, take 45 days. Look at this. Now there are a few notes that is relevant. Now I'll make the discussion of notes in an examination context, not just randomly explaining you the provision. I'll give you an examination context to this. Look at this exam tip, which is very important. They'll use this examination point of view in multiple questions. In a bigger question also, they'll try to trick you with advances. How do you treat advances in GST? If you have received advances and you are a supplier of goods, what provision will be applicable? The provision of notification 66/2017, which says date of receipt of payment is omitted, will be applicable. So what happens? No GST is payable in the month of advances. If you have received advances for supply of goods, no GST will be received, GST is payable in the month of advances, because that date of receipt of advance is omitted by notification 66/2017. So even if I got an advance and I am a supplier of goods, I will still pay tax only in the month in which I issue the invoice, or my due date of issuing invoice has happened. That is whichever is earlier from 12 subsection to clause A, date of invoice or due date of invoice, that only I will apply. But if I am somebody who is supplying service, that is the second branch that you can see on the screen. Now if I receive an advance, GST is payable on advance received itself, which means advance means I got the money before I complete, before I issue invoices, I got the money. Now you have to pay taxes on the advances on the date on which advance you got, which means your month in which you got the advances will become the time of supply for advance payment. So for services, even on advances, GST is payable. So I have given an example there. But there is also an additional provision that you need to understand here. What if I receive the advances by check? Payment is received by check as an advance. In services, in goods, advance receipt is irrelevant for us because we are not considering advance date, except for specified actionable claim. Payment is received by check on 31st January 2024 as advances. Same is deposited and credited to bank only on 5th February. Now I got advance, but I got it as check. So then I have one more question. Should I take the date of entry of advances in my books or in the bank account? So that's it, whichever is earlier. So wherever you have confusion on date of payment, that's it. Bank entry or books entry, whichever is earlier. So here 31st January would be the advance receipt date. So the time of supply will also be 31st January. They are asking questions on special cases of due date as well. So let's quickly go through what are the special cases of due date as well for our understanding. Now there are 4 cases of, we have already discussed 2 due date of invoices. One is for goods. We said if there is movement of goods, then it will be the date on which, date of delivery, if there is no movement, if there is movement, date of removal. And we have said in case of services, it will be 30 days from the date of completion. But there are a few special cases where I cannot apply this general provision that is given in subsection 4, 5, 6, 7. Subsection 4 says when there is continuous supply of goods. First of all, you need to define what is continuous supply of goods. Continuously supplying goods when? They said continuous supply of goods is the word we use when there is supply of goods by pipeline, cable, etc., which is also having periodic payment, which means there is a LPG gas connection that is coming into a kitchen of a restaurant, but it is coming through pipeline, direct pipeline. Not, they are not doing it by cylinders, direct pipeline. Now, ideally, when should I issue invoices? When I receive the goods, I should issue invoices, right? But this is continuously received. Then what will I do? So, when supply of goods is happening through pipeline, cable, etc., which is having periodic payment, I have to issue invoices on the date in which I get an account statement. If I don't have an account statement, I am still making periodic payment on that date. There is one question that we have in the question bank which is very important for us to go through this. So please make a remark, please go through continuous supply question in our question bank. Then there is also an understanding on continuous supply of service, but the definition is slightly different. What is continuous supply of services? It says for its continuous supply of service means a service more than 3 months involving periodic payment. Continuous supply of service means what? A service for more than 3 months involving periodic payment. Now, due date of payment, so it is not service by pipeline, cable, etc. It's rather a service which is for more than 3 months, and it involves what? Periodic payment. Say I'm doing a construction service. Construction service is provided for a period of more than 3 months and it has periodic payment, right? I will make payment as and when they finish some part of my construction. Normally, I have to issue invoices within 30 days of completion. But when I say completion in here, I mean 100% completion, isn't it? Now, this is not 100% completion that I'm talking about here. Whenever there is part payment, there is partial completion, I need a separate due date of invoice. They're saying if your service is for more than 3 months and there is part payment received, you have to issue invoice for part payment itself. What invoice is? They said look at the contract. If the contract is talking about what is the date in which you will get part payment, that is the due date of issuing invoice. Or if the contract is linking that to completion of an event or a milestone, that completion date will be your due date of invoice. Nothing mentioned. Whenever you receive a part payment, you issue invoices. Okay, so this is the date that I have to take it as due date in some special cases. There's a question on this also, if I'm not wrong. So there's a question on Ranudhut, and there is a question on continuous supply of goods called VST Limited. So you have to look at that question. Look at other cases. There are 2 more cases. One is cessation of service before completion. Okay. Now, if I stop the service, say I engage somebody for 10 days, but after 2 days I told them no need to come again, they can never complete the service and then issue invoices. They said if the service is stopping before completion, on the date on which service stops, that is the date, that is the due date of issuing invoices, but only to the extent of supply made before such cessation. Alright, then goods sent on approval basis. What is goods sent on approval basis? They're saying that if there is goods sent on approval or reject basis, if people could send the goods and the customer can either approve or reject, what happens is while sending the goods, I will not issue invoices. I will give a delivery challan, because at the time I am sending the goods, there is no supply that is happening. Now, the supply will happen only if supply happens only if they accept that particular product, right? So there's a question on when should I issue invoice in such cases. The government says people could misuse this provision. This is that if you're sending goods on approval basis, only 6 months you can wait without issuing invoices. If they approve before 6 months, date in which they approved would be the due date of invoice. If they don't approve within 6 months, then when after removal, expiry of 6 months would be the due date of invoice. So that will be your time of supply. You can't wait any further. Now let's look at time of supply for RCM cases. We have already seen this once, but let's look at this once again. In time of supply for RCM cases, so you can look at all the questions relating to that from here, because the concept is already discussed. So you can just look at the questions and that should be it for this chapter. Okay. Same. In 12 subsection 3, that is 12 is for goods and 3 is for recipient. So whenever a recipient of goods is paying taxes, like for cashew nuts, not shelled or peeled, PD wrapper leaves and all, it's the recipient who pay taxes. You have to take earliest of 3 dates. Basically for a recipient, date of payment is the relevant date, but they are asking you to compare it with the date of payment, 31st day from date of invoice or date of receipt of goods. You have to take earliest of this. So very simple thought is that I'll give you 30 days time from what date invoice. If you make the payment before that, then that is your time of supply. You make the payment next month to the government also. To whom am I saying this? To the recipient. So that's why they said date of payment, 31st day from date of invoice and date of receipt of goods. In case of services, I don't have date of receipt of service as a comparison. I said date of payment. Again, for recipient, relevant date is date of payment. For supplier, it is date of invoice. So recipient, it is date of payment, but here I'm giving 60 days from invoice to make the payment. So date of payment or 61st day from invoice, whichever is earlier. So this question, see, if you look at 9 subsection 3 and 9 subsection 4, we have learned a lot of RCM cases. All of them are services. There they can club this as a question. So always learn these together. Okay, so if I make the payment within 60 days, date of payment is my time of supply. Payment to whom? Payment to supplier. If I don't make payment within 60 days, 61st day would be my time of supply. But if I receive services from outside India, supplier is in non-taxable territory, recipient is in taxable territory, it's taxed under RCM. Supplier non-taxable territory, recipient taxable territory, it is taxed under reverse charge mechanism. Okay, now in such cases, supplier is non-taxable territory, recipient is in taxable territory, is RCM. In such cases, if the supplier and recipients are associated enterprises, 2 conditions to be satisfied. One is supplier non-taxable territory, recipient taxable territory. Then these 2 are associated enterprises. Then instead of 61st day from date of invoice, I should rather take date of entry in the books only. What is the due entry date? The Indian company which is going to make payment for the services received from outside, when did they make the due entry? That date or make payment entry date, whichever is earlier, would be the time of supply. They said sometimes the supplier might not be registered, so they might not give you an invoice also. Okay, supplier is not registered, they will not give you an invoice. In such cases, you can take your entry date itself. Okay, you don't have to do, like you have to do 30 days, 31st day from date of invoice, 61st day from date of invoice, no, you might not be able to do that. So that is the provision that I have given here. When goods or service is received from unregistered supplier, an RCM is applicable. Date of entry in the books of recipient will be considered instead of 31st or 61st day from invoice, because there won't be any invoices. Then subsection 4 talks about vouchers. They have defined vouchers as gift voucher, voucher which can be accepted as full or part consideration, not discount voucher, gift voucher. They said when you issue voucher, there's an RTP question on this. I have solved that question during the RTP discussion. You can always look at that. They said the voucher can be of 2 types. A lot of industries where vouchers are increasing a lot. So they said if there is so many vouchers, I should be able to do something about the vouchers. So they said, I want taxes early on the voucher. What kind of voucher? Specific voucher. If there is a voucher at the time of issue itself, I know what product I am going to supply against this voucher. You have to pay taxes on the voucher, on the rate of the goods you are going to supply on the voucher, and date of issue of voucher itself would be the time of supply. But if the voucher is a general voucher, you can get any product from the voucher. The date of redemption of the voucher would be the time of supply. Okay, so this is the provision that we have for voucher. Then we said, what if these people are not even registered? I don't know how to compute time of supply. But somebody who's not even registered, not issuing invoices or doing anything to comply with GST, they have some liability. Then they said, if they are registered and I'm not able to determine time of supply by 2, 3, 4, I'll apply residual provision. In case where periodic return has to be filed, Time of supply would be date on which such return is required to be filed. I'm not even registered, so I don't have any date available with me. Then when did you pay the taxes? That date itself, I'll deem it as my time of supply. Nothing more in that, just deeming it as my time of supply. Okay, that's what is residual provision or subsection 5 in 12 and 13 talks about. Okay. Now subsection 6 talks about addition in value by way of interest, late fee, penalty for delayed payment of consideration of goods or service. Date on which supplier receives such addition in value, like date of payment of such interest, will be the time of supply. This is what the provision says. Only this much is there in time of supply discussion. All right. Okay, so the chapter is also over. So we have looked into charge, we have looked into TCS, we have looked into e-commerce operator, CLS, value, and time of supply. Okay. Now we will take our bigger break now, and I will close the video now with this. I will do the question, okay, don't worry, but I need to take an hour of break. So we will start the next session by 7:45ish, and we'll go till another 2 hours we can do today. Whatever left, shall we conduct one more session for tomorrow evening? Tomorrow I have regular classes, but after that I can come and then give you a recap. You have 2 more days now. I just wanted to be a part of the revision tomorrow also. Okay. So after the break, I will come and then do ITC chapter. We will look at place of supply. We will look at TDS, and that's it for probably that's what we'll be able to do. Okay, perfect. So thank you all. I will start back the next session by 7:45.